all the way up to losing a 0 to a 1. We've got major support to here at 5 zeros and a 4. We're currently at 5 zeros 1 5 with another chasm like we were seeing on Hex here. These are about, what did I say? I said it was 30K. About $2,000 per tick. Here that we're currently in about 1,800 per tick. So you can only imagine, this is only $500 per tick down here. Way higher volatility than what was in Hex over here. Right here they've got, oh, maybe not. It's about $700-800 as opposed to the $500. So it's about the same. So they're mimicking each other with the liquidity too. So price would, since Hedron is quite very well tied to Hex, like we were seeing. Oh, that's Icosa. Here, that the majority of the liquidity is actually in Hex Hedron pair as opposed to Hedron USDC. That to see that they're kind of similar to each other and how they look. Gotcha. As you can see, they're kind of similar. Not really. Oh, man. Sorry, guys. It has this low flat over here, this high there, a chasm there, and then flat up top. It's got this flat here, high support there, chasm there, flat up top. Same thing. Two different pairs. They look almost exactly the same. And Hedron is majority correlated to Hex. Hex is majority correlated to USDC. Some of it is correlated to Ethereum, but not as much as USDC. So Hex will be, for the most part, decorrelated from Ethereum and BTC. However, since there is the correlation between the two, here, I'll go ahead and pull this up again for those who weren't paying attention before or didn't have the opportunity to pay attention before. That we've got 3 million TVL locked in ETH Hex pair and 5.8, almost 6 million, almost double to TVL to USDC, meaning that we're mostly decorrelated from ETH and BTC. I kind of correlate both ETH and BTC together as one whole because they pretty much are completely correlated to each other and mimic each other in pricing. There's almost no difference in looking at each chart when you're looking at them. So no purpose in looking at one and the other, just looking at one is fine. So riding the wave, it still happens, right? ETH goes up 100%, Hex will go up 50%. ETH will be the leading indicator. When it starts to show a green candle, Hex will shortly follow afterwards. ETH starts to show a red candle, Hex will shortly follow afterwards. How long after? I don't know. I don't fucking know. I couldn't tell you that, but it will. That is how it will work. Trying to think if there's anything else that I'm missing here to think about.
Quick question. What he just dropped, is that to see all of the liquidity across the blockchain for that token? What you guys, yeah.
No, this is, you can track any transaction. You put the transaction hash and you will see the fund flow of the transaction.
Can you find the specific, so Could you find the addresses in that?
No, you go to the page. I put the link. Imagine that you make a swap of Icosa Hedron, and you want to see from where it took those tokens, and you put the transaction hash there, and it will draw you which movement it has those on the blockchain.
So we can go to here, right, on Hex, and we'll go ahead and pull this up, right? So let's say this guy here that's just sold 1 million Hex, let's say that we're being spiteful and we're like, fuck this dude, even though it's probably this same dude. This is probably an MEV bot, right? They happened. Oh, no, it's not. Never mind. That is wrong. Do I have one in here that looks like an MEV? No. Okay, so this guy just straight sold. So let's go take a look at his shit. Came from this wallet.
I think I answered it because I got what you were saying, and it says sender on here. So exactly what you're talking about, I could go and see what this person's wallet is actually doing. That's what I was looking for, because I'm seeing some that say contract, and I'm not able to access like people with liquidity.
Hash.
Oh, yeah, okay, transaction hash. My bad. I copied the wrong one. Not the wallet address, but the transaction hash.
Like if somebody removes or adds liquidity, it'll pull just the contract. So then I would just click on that and go for the transaction hash and be able to find that person's wallet, right? Where it says sender there, or is
Yep. Oh, neat. That's cool.
Amazing tool, bro.
That's cool. You know what? Let me see who is in here right now. Sorry. Okay. So let me see. Let me give that some time. So yeah, you see how it's split from him to sell the hex into USDC instead of just selling it straight into USDC for how much hex that they sold. It took some of it. It took almost all of it, minus maybe 130K of it, 150K of it, and gave him USDC for it. But then it went and took the rest of it and swapped it into DAI through it. And then swapped that DAI into USDC and gave him the rest of it. That's how the router works. Boom, USDC, DAI, exchange, USDC. That was a pretty simple one, though. Neat.
You can put Gunter's transaction hash.
You guys see this? This is probably the most beautiful thing that you guys will ever see. Whoop. I can't do that. I'm not gonna do that. It's so big that it slows down my browser. Okay, I'm gonna get off of that. Give you guys just a little sneak peek. Anyone know what that was that I just was showing? Anybody have any idea what that was?
You can go to the bottom, and it keeps saying you in different form the flow. You can watch any transaction, even of the other tokens, maybe the ones or the perpetuals, the others who are more complicated to see the routing, I think. That's why I put that example with from the Maximus DAO transactions.
I see that. That's cool. I like that. I am going to, oops. Copy link. Take it over to here. Saved. Thank you, sir. Okay. So that's about all I got for you guys right now. Okay, I went through support for Hex, support for Hedron. I think I just got to Icosa and started talking about a bunch of shit. Never really went through the support. We've got significant support to above $1. I'd still call this significant. Comparable to the assets that we have versus people who are putting USDC up against it. USDC, Icosa. This is significant support, really significant. This is really significant support. This is price appreciation. This is price depreciation. Like I said, this is probably someone setting like a limit order, probably going to pull this liquidity if price was to go down into the 45, 30 cent range. I don't know that for sure, but that's what I would do. Get it cheaper than everybody else. And price starts to move up. Let's see. Let's go check.
Ask a question.
Yeah, absolutely.
Yeah, just, you know, when you say support above the red line, does that mean that it's the limit sell orders? Is that what that is?
No, this is total support. Liquidity. This is actual liquidity in USDC pair. This is
why is it above that price then? I don't understand. I understood what you meant by if it's below the red line, that means that I'm assuming that means that there's limit orders in place up to can you see where it's 40 cents? You've got a big wedge there. So I'm assuming that's someone, a group of people putting limit orders at that price. But if it's at, say, 80 cents above the red line, isn't that to show you who's putting a potential sell order in place? Isn't that what you're referring to?
No, not unless they pull liquidity when price went up there. If they pulled liquidity, then it would actually cause the transaction to happen and it would be sold at that time. And it would reduce support at that area for that 80 cents, meaning that instead of having this all the way up there, it would be down here, which would actually cause higher volatility. This is low volatility. This is low volatility. This is mediocre volatility, high volatility, extreme volatility, extreme, high, mediocre, low, mediocre, low, mediocre, extremely high. Meaning no price support, mediocre price support, high price support, mediocre price support, high price support, medium price support, low price support, no price support. So that's what I mean by support. Like,
so what I'm not understanding is
not limit orders. This is not limit orders. This is not people. This is not people to sell assets. If they leave their liquidity there, then price can go back down and assets are still there. If the red line goes up there, everything below this would turn into USDC, and everything still above it would stay Icosa. If price goes back down there, then this is all Icosa again, and this stays USDC. This goes down here to here, USDC, this all turns into Icosa. Nobody's sold, none of these liquidity providers sold anything. They made fees, but they didn't sell anything. As soon as they pull it, then if this price goes down to here, right, and turns all this into Icosa, then this fucker is happy, really happy, because that's what he wanted, right? He just bought all this shit for between 45 cents and 35 cents. But if he didn't pull it and he left it there, leaving for price to go through it again, then it would allow for everyone else who is buying and selling to buy and sell across his pair where he makes fees. This is not a limit order. This is just price support. That's it. This is price support for the high side. This is price support for the low side. That's why you call it impermanent loss, and it's not called permanent loss, right? If this is his range and the price was here and it went up here and he's not getting fees and he didn't want to keep all this in USDC because what he really wanted, let's say that when he put this in there, it was all Icosa. All this was Icosa, right? And he was like, I want price to stay in here, so I'm going to stack it up higher than everybody else's so that I can try to force this red line in between here and I can make fees in between here. But let's say price goes up here where it's at and he's going, well, shit, all my Icosa is gone and I could have sold it up here, but instead I sold it up here. Now it's all USDC. So it's impermanently lost on the value that he could have sold up here. So he's going to leave that sucker there, right? Let's say that when price was down here, that's when he put it there, which is probably the case. He's in an impermanent loss situation where now those assets are stuck. If he pulls all this liquidity, then he is now taking all that USDC and then probably going to have to buy at a higher price or reappropriate his assets here, hoping that he can make more fees to be able to make up what he lost down here. That would be permanent loss if he pulled it. Bad news. But right now, since he's left it here, he's hoping that this price goes back down into here and that he can pull it at that point in time and be like, okay, I made some fees. That was a bad move. I'm not going to do that again. I learned my lesson. Now I need to learn how to actually liquidity provide. Unless you're using it as a limit order, then you're going to be happy that you did what you did down here, potentially, maybe, and you just wanted this USDC. But the fact that it's still sitting here suggests that that's not what they wanted to have happen. Otherwise, they're going to have to wait for this red line to go down in here for them to be able to remove their liquidity at 75%, 25, 50%, or 100%, however they want to do it, and try to get back into not having a permanent loss when they remove it. But right now they're safe by leaving it there and allowing for price support to happen. If somebody comes in and sells, then it'll move quickly through here and it'll get caught in this area by him. And that's what they're trying to do, make this sticky for this area, which is fine. It's fine. But he may have to leave it there now, hoping that the markets change sentiment and start to go back down into this area, which it could. It doesn't mean it will, but it could. But how shitty is this guy going to feel if you see the support that's in through here? If somebody comes in and starts adding more liquidity onto here, making this go from here to here to here to here, or all the way across up here, making this big chunk way more liquidity than what's down here. And you just start watching this red line start ticking up into here, meaning that this guy, instead of selling way down here in the 35, 40 cent range, which is what they've done, could have sold up here, unless this wasn't ever Icosa. And what this guy did is took a bunch of USDC and just stacked it right into here, hoping without any impermanent loss at all, if that was what had happened when they put it on here, was it was never Icosa and it was always USDC, because they were happy that if price goes down there, that when the price goes in here, he'll pull all this range and then extract the value from it and take it. And then this will all be gone. It'll look more like how this is all black here. It'll look all black all the way across here. And this whole stack there will disappear. And all this will be turned into Icosa as soon as that red line goes down to 38 cents and is sitting right here. And he'll take all this as Icosa and then probably move it up here where like a TA fractal would go, well, the price used to be here. There's good support back here. It's been up here. So I'm going to probably put it from here to here and then hope that price goes up, and then he'll sell it for a higher cost, giving him more USDC than what he ever put in through here.
Okay, so just another point. There's no way of knowing on that chart whether it's USDC being provided as liquidity or Icosa. Is that what you're saying? Underneath the red line?
When it was originally put in there, as far as right now, no, not unless I'd been watching it. Like if this was all blank here and none of this was here from here to here, and then tomorrow I go look at it and all of a sudden there's this all here, then it was USDC. I know for sure that that guy just put all USDC. It was never Icosa in there to try to support the price if it went down in there and capture all this in there. But as far as when I went and looked at it this morning and I looked at it yesterday, this was here yesterday and it's here today. So I can only make assumptions as to whether it was Icosa then, because price obviously did go down here, right? So that's why I'm like, it could be either or. When price was down here, this guy could have been like, I'm going to go put a buttload of Icosa in here at this price. Let's say it was back here at this time, right? And when price goes through it, then I'll pull this and I'll take it, right? And maybe they're just not paying attention and they didn't pull any of it. Or maybe they think that price will go back down in there and they'll start to garner fees. But having such a small little window right here between here and here would suggest that they're not a market maker, that they're not trying to support price in long duration. Like a market maker would be like supporting from here all the way to here, or from, let's say, local high of $1.60 to local low at 25 cents or whatever that would be around here. They would support from here all the way to there. And they know that price would go anywhere between there, and they'd be making fees for a long period of time, maybe months, that they would always be within range and in getting fees. And they don't, spreading your ranges from here to here means that everybody else that's in here is going to share fees with you. So you'd get less fees, but they don't care. They're going to be there for months, while these guys may only be in here for days. This guy may only be in here for a week. These guys may only be in here for a week or two. These guys, days, weeks. These guys here, they go all the way up to $2.25. They're going to be in here for months and months and months and months and months, knowing that no matter where they're at, that they're going to get fees. And this guy here that supports here all the way through here, as soon as it gets to here, we have no idea how far down it goes into the price range, how wide this range actually is. Same thing goes with this guy. It looks like his range only goes from here to here, but it could go all the way down through here. Same thing with this guy, stack right there. It could go all the way through here. Not sure. But these are longer players. This guy here only has a couple, but it could be supporting through here. This guy here is a different guy. It could be supporting through here. This guy's a different guy. But you can see his stack. It's only from here to there. That's it. This guy here could go from here to here. It looks like he's only between these two ticks, but it could go from there to there, right? Which it could be this guy here is all the way across here, and somebody just put a small little tiny amount on top of him right there. You could do a lot of research and go actually be able to see all this stuff. There might even be a website that'll actually like tell you, like split all of this from here to here between all the addresses and like give you little boxes. Like this guy's this much. There's 2 guys here. Half of it is one guy. Half of it's another guy. Here's half of it's one guy, half of it's another guy. Here's like 5, 6 individuals. Let's say that 1, 2, at least 3 different individuals that's stacked up here. But then there's a 4th individual that actually supported all this right here. And these guys are just stacked on top of him between here and there, here and there, here and there, right? In between them. And it could be 5 different people all trying to get fees within this range. Or it could all be one guy. One guy could come in here and say, fuck it, from here all the way to here, I'm going to put this thin little bit of liquidity on here. I'm going to stack on top of myself and go through here on a totally different liquidity. Here is a totally different liquidity. Here's a totally different one. I'm going to go up here and really stack. As I get closer to the price, I'm going to really start concentrating my liquidity to really engage in fees. And I can mitigate my impermanent loss at any moment by making 1, 2, 3, 4, 5, 6 different ranges within the higher side of sports on the pricing. And then any USDC that they make off of their fees, they can go underneath the price and start stacking underneath it to support the price too, if they wanted to. Or if they have a job, then they can just start stacking underneath it if they wanted to, hoping the price will go down and they'll get a cheaper price than just going to Uniswap and buying at this current price right now, which going through Uniswap and buying at this current price right now could actually move this red bar up, meaning that you're not getting the biggest bang for your buck by doing that. So it's a delicate balance of a dance in which you play when you're providing liquidity and you're in the pools with a bunch of people. So you just don't really know, and nobody knows where price is going to go, but you can see where it's supported and where price is going to slow down its movements as opposed to when it's going to be more volatile and pick up its movements. Which if price starts to go up into these lower volatile, higher volatile areas, what you'd like to see is more support, like people that are beneath the price removing. Which if they're in an impermanent loss, then they're probably not going to move very quickly. They're going to have to make the decision to take a loss and then maybe start supporting up higher. Or maybe you get some other bigger players that aren't providing liquidity here. They go remove liquidity in a different pair. They go into the exotic pair like Hex Icosa, let's say, instead of the USDC pair. And they play the game that way and try to get more of the other asset to go up above the price and start putting more Icosa in there that used to be Hex instead, and then trying to get USDC out of it. So instead of going and selling Hex into USDC, you could utilize the Icosa Hex pair or the Hedron Hex pair support through liquidity, turn one into the other, and then go into the USDC pair, where you'll see the, if that was the case, that you'd see Hedron start stacking up its TVL, or you see Icosa start stacking up its TVL. Generally, I think with Icosa, since it's newer, that as we have people that get more assets through just completing contract commitments, that you'll start to see the TVL start to increase as we move on through the years. I think that we're only at maybe 100 million Icosa between the what's set on limit orders, what's set in liquidity, what's actually being staked, and what's actually sitting liquid. And I'm probably overshooting that on 100 million, because I think it's only like 38 million or 30 million staked, with maybe less than 2 million in liquid. And let me go back over here. As far as liquidity, there's only 50K in this particular pair. And there's not really enough to suffice to really get into looking at the rest of these. 26K ain't much.
And so you mentioned that you don't really look at, I imagine you don't really look at TA.
I don't. Yeah, I don't.
But then do you look at these charts, these liquidity volume sort of on a daily basis to get a sense for what might be happening in the market in the short to medium term? How do you go about doing this? How do you go about sort of having a look?
I used to a lot, especially as we're in like the bull market, right? And prices being derived higher. I like to see that the market makers are paying attention and moving their assets along. So if I am looking at it every day, then I'll notice like, okay, this stack is here. Tomorrow it's gone, and it's like lower down over here. And it's like, okay, well, people are trying to support the lower side, and they think that price is going to go down. Let's say that that you had like this right here, right? You had this big old jump up, and you just don't know if it's going to keep going up. But some people speculate that when you have such a large movement that you're going to start to see some of this happening, which is what happened. So when you see that happen, you might see people move liquidity that it got pushed through, and maybe start to support what you would call lower areas, because they want to capture this movement that's going to be going down. Generally, people wouldn't assume that it would go down like that, right? That it would be like that. But sometimes you can nail it. Sometimes you can be more right than wrong. But
is there a way of looking back in time and seeing how the liquidity pools have sort of shifted over time? Is there such a tool?
I don't think so, because it's going to update as soon. I know that they have some, I forget what they call them, like websites that'll go back in time, like a time travel thing that'll go back and look at it. But as soon as you go to it, it's going to update liquidity to normal time, right? As soon as it actually appropriates and comes to this, what it's going to do is it's going to come to this screen here on volume. And then when you hit liquidity, it's going to update it to real time. So no, you would have to either have a good memory, like look at it yesterday, right? Or screenshot this is what I would probably do, is like put where current price is, or at the highest side of price, so you can do the math, or maybe the lowest side of the price where it shows you that, and you can do the math. And then screenshot that, and then label your screenshot with a date. And then the next day you can compare the two. And then the next day, take a screenshot from the next day, and then compare the three. And then take a screenshot for the next day and compare the four. And you can see how it trudges along as price moves, or trudges forward or trudges back, depending on what you're doing. It does take a little bit of work, but I mean, if you really want to pay attention to that stuff, it's a good idea to do that stuff.
Yeah, because I'd be curious to know, like how you just described in the last leg up, sort of it went up and then it just sort of, the price went straight down. So I'd be curious to know what the liquidity pools look like at that time, and how, who was moving in, who was moving out. That'd be really interesting to see, because we're sort of at a similar point right now, aren't we, really?
Well, yeah, like what we were just talking about before is when we had this happen down here, that my suggestion was maybe, just maybe, that's when this guy decided to put liquidity in, one of these guys out of the maybe potentially three or more that were there, and price was over here. What did we go down to? What was the low here? 24 cents. So 24 cents would have been right there. Isn't that quite odd that this right here is there when we went down to there? So to me, it would suggest that when that red line was where the white line is right now, that guy went and took a bunch of Icosa and set it there because he was okay with selling it. I don't know if that's absolutely for sure, because like we said, I didn't snapshot it then, right? We're just looking at it now, and I'm telling you maybe my supposed position would be on maybe this is what had happened based off of this going down here, right? And as you can see, that through that guy's liquidity up to 50 cents, which would be right here that it starts at 24 cents there, goes to 50 cents there. The highest amount of support that we have, which price should move slowly through him. But as you can see, it's only per tick. Let me pause this. It's only $1,800 per tick, right? So maybe about 2K. 1, 2, let's see. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 18. And it goes from 1,500 to about 184. So we'll say 16.5. 16.5 times 18. It's only $30,000. So, you know, that guy came in and spent 40 grand, right? The other day, the guy that staked 1.3 million Icosa spent 40 grand. That's his whole thing right there. And then here's $400, $400, $400. So it's just like, that's why we see between here and here got wicked up, and then boom, green candles all the way up to 53 cents. And that's his liquidity from here to here. And then that chasm of open space, you see how all of a sudden it's big giant green candles through this cavern right here.
Yeah.
That's volatility in action. That is the visual representation of that chasm being there. Man, I keep clicking on the wrong one. Here versus the highest amount right there. Here would be like little candles, as you can see.
Yep.
And then actual volume support going through there. Like look at here, let me
that would be a follow basically in the liquidity pool chart. Yeah.
Look up here, right here, right as I go through this. I'm going to unpause it and show you. 52K, small candle. 37K, small candle. 130K, big candle. 68K, it's about half the size of this candle. 161K, 45K. Small candles again, small candles. Small volume. 118K. 161K. This green candle is about the same size as this one. 118K. That's priced between 56, 42. 56 and 42. From there to there. One day moved all the way across here to get us to there. So that's how quickly your impermanent, your availability of thinking that you're safe and getting into an impermanent loss situation can happen based off of one day's worth of movement of 160K in the Icosa pool. This is neat. This is what I do. Like, all I need to do is look at this and look at this, and within seconds of my what I can look at, what I know to look at, I've already determined what we've spent 2.5 hours going over and me showing you what it looks like and what it is and why it does what it does. And hopefully at a certain point, you guys will be able to do the same thing. You won't need to do all of this stuff, right? You can just go look at the two different pages, which is flipped the other way, right? And be able to see what is going on here. But I mean, as a common courtesy, I might still continue to keep putting up these visual representations for people to be able to see like support, volatility, lack of volatility. The slide to high price, right? Unless somebody comes and moves their liquidity or adds liquidity up in these higher ranges, you know, we'll get to see like what this chasm did by jumping across there with low volume, getting us to the higher price.
So if you were a new entrant into the ecosystem and you wanted to make an impact on the price, and you knew something about liquidity pools, what would your thinking be there?
It depends on how much money I have and how much I wanted to spend.
So if someone like Godwell came in, for example, he's done it in the past. So how does he look at it, and you know, how would he sort of enter in a situation like now?
Okay, so what I would do is see how much Icosa is up ahead in front of the price that I could actually buy off of market. And if there's not enough in there, see like every tick, I can see that there's only 3.5K Icosa there at current price of 60 cents. Dollar value 348 times 60. That's $2,000 per every one of these ticks. So 2, 4, 6, 8, 10. I could spend about 10 grand and I'd push the price up to here to about 70 cents, which I'd rather not. I'd rather try to keep it around 60 cents, 63 cents instead. Did we already have the price move up? Goodness. Okay, cool. Nice. Congratulations, everybody. It is being supported very nicely. It likes this. Okay, back to business. So what I would do is since I want to buy Icosa, but if I wanted to do that, then I could only buy small amounts, right? I can only spend 10K. If I'm God Whale, 10K is nothing, right? I'm only going to end up being able to buy 3, 7, 14,000. Within this lower volatility, I'd only be able to buy maybe 14, 15,000 Icosa, which is about what he makes per day on his current stake that he has, right? He makes this amount of volume per day. So luckily for Icosa, what I would do is I would go mint my Hedron, not mint it, but I would go take Hex. I'd make an HSI, I'd use the buyback function, and I would avoid all this shit altogether. And I would get me a fuck ton of it. Like what he's currently doing. Let's say in a year when his stake ends on his 360 days, he's going to have more than everybody else. He'll be able to go and stack up an ass load of this, where instead of it looking, is it just going to keep doing that? Okay. So this liquidity would actually be way up here instead of way down here. Instead of it being about $2,000, it would be about 5 to 10 times taller than this, past my screen up here with height. And then I'd buy into it. And then after I move the price through it with my availability of being able to do that, I would start removing liquidity behind myself after moving it across. And then I would take more of my liquid Icosa that I had and then re-provide liquidity across it again, making it less volatile for me to buy across my own pair, and then removing liquidity behind me. So that way other people can't take advantage of my liquidity that I added. And that's what he does with Hex. That's what I can see that he would probably do with Icosa if he ends up liking it a lot. And that's generally what big whales do. Alex is particularly ingenious when he added that buyback function to avoid having to deal with all this volatility, non-volatility, the rest of this garbage. And you can get straight assets in the form of just using a stake, maybe even going in the auction and buying it again by minting some Hedron, and then getting more and then appropriating it into liquidity. Right now, fees that you'd get for providing liquidity isn't even anywhere close to a percentage of comparison and risking impermanent loss, as opposed to just staking it. Your rewards are way higher. So it's not really incentivizing anybody to actually come in here and play these games in liquidity right now on Icosa. And it doesn't matter what asset you go to. If you have a fuck ton of it already, then you can go supply availability, which looks like a sell wall, really, but it's not. It's support for current pricing. So you can buy into it and not move the price a whole lot, right? If I was to go make $100,000 sale, buy, and move the price all the way up to here, right? $1.83 as opposed to 60 cents. I'm not going to be happy with that because I really pushed the price too far and I didn't get more bang for my buck. I actually got less Icosa by doing that. But if I was to make it thick like this all the way through there, then instead of it moving all the way over here, it might just move over to here at 82 cents instead of $1.80. It would only move to 82 for the same amount of money that I just spent, which I might be okay with that, right? And if I wasn't okay with that, then I can just go stack a hell of a lot more on top of it, use that liquidity to slow the price down from moving forward, and buy more Icosa for the per dollar. And then after I'm done moving it to, you know, let's say I stacked a fuck ton of it and I only went from 60 cents to 70 cents, then I just remove everything behind it and leave it back to looking like this again. And then if I wanted to make another purchase, I'd leave whatever I didn't buy into of my own liquidity. And then I would stack more liquidity in front of it and then buy again into my own liquidity, giving myself the availability of not moving the price too far against me, especially if the router, like that page that was posted earlier by Hexkin, to see where the router is going to play those games. Or you can just kind of go into here and see where all the money's at and see if there's even enough between all these pairs for the router to suffice for what you're trying to buy, right? Just add all this up. You know, if I'm trying to buy $1 million worth of Icosa, then there isn't even $1 million worth through all of the liquidity pairs. Through every single one of them, there's not $1 million. So at most I would spend maybe 100K. If I wanted to spend more than 100K, I would do 200K and see that there's, you know, it can go to Deci. It can swap some into Deci and give me some of the 73K and then go back into Icosa through the USDC pair and then suffice for the 135K. There's my 200K right there. Since that's the bigger one and that's the bigger one, it would probably use those two to give me my 200K. And then it would put everybody that has anything in it, which, I mean, this is not real, honestly. 135K in the USDC Icosa, only 104K of it is actual USDC. 49K is Icosa, but that's at 60, whatever we are, 62 cents. So that's time for math. 49,170 times 0.63. That's only $30,000. $30,000 worth of Icosa, $104,000 worth of USDC. And I'm not trying to sell Icosa. So that $104,000 worth of USDC don't mean jack shit to me. What it shows me is that I've only got $30,000 I can spend before it goes all the way up to here. That means I'm going to have to add liquidity to be able to buy across my own pair without causing myself so much slippage that it's just stupid to do. But instead, I can just go to app.icosa.pro and sell an HSI and get $1 million worth of Icosa immediately, right away, now. And then I can be the main supplier of Icosa ahead of everybody else, supporting the price to $2. I probably wouldn't. I'd probably stack it right here, $1.56. $1.56 all the way to, I'd probably put some USDC in there down to 48 cents. And there'd just be this big giant block here. And then as I watched the rest of the assets move along, I would probably reappropriate my liquidity as I saw fit, as I saw it move. And that's when I would be looking at everything every day, and I would be taking screenshots as far as me being a liquidity provider that wanted to have concentrated positions. I would be doing that for sure. But as of like lately with the bear market coming in, like I've mitigated some of my risk and lowered my I didn't want to increase my risk profile on a lot of this stuff. So I just started going back to protocol usage, use the smart contracts the way that they're supposed to be used, reduced my profile on providing liquidity myself in exotic pairs. And if I was to not slow down on that and wanted to be like really advantageous on continuing what I used to do, or how I used to do it as much as I used to do it, then in a bear market, what I would have done is I probably would have backed away from providing even these types of pairs with USDC to a asset, and probably would have went into stable pairs on providing liquidity. USDC DAI, USDC Tether, something like this, because it stays pretty stable, always moving sideways. And there's always good amount of volume because people need to get money. They need to sell. They need to buy. They need that stuff. So they would have. So I didn't do that, but that would have been my move if I decided that I wanted to stay so busy in doing it. But I'd gotten busy with other things where I couldn't watch all this stuff so much. So I just kind of reduced my profile of risk and stopped doing all that. Started teaching more, I guess.
That's amazing information. Thank you so much. Really appreciate it.
Yeah.
And one question I have to you, you mentioned Godwell was providing that kind of liquidity when he was sort of buying up Hex. Was he doing that on that run from, what is it, a cent to about 50 cents? Was that essentially what his strategy was all the way through that?
Yeah, unfortunately, Deck Screener doesn't go all the way back to when it was back down around here, right? This is about where it was, and then it was like whoop, all the way up here, right? But yeah, all these. Let me see if I can make it a little bit more colorful. But yeah, Godwell, 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 Godwell. Stopped. He stopped providing liquidity. This is not Godwell. But yeah, all this was Godwell providing liquidity and buying into his own shit, and then letting people sell in, and then he added more liquidity. He liquidated all these people. And then he stopped providing liquidity. He pulled it. And as he pulled it, it caused volatility, which meant that the sellers started causing for these candles to happen. Other liquidity providers sucked it up here in these wicks. He waited about a week. He provided more liquidity, bought into it, pulled his liquidity, let it fall. It didn't fall very much, which I'm sure he was happy. It started to go sideways, which meant that other people, other than Godwell, were moving they took impermanent loss, moved it up here. Richard Hart came into a YouTube video, said, you guys got to stop doing that shit right around here. You got to stop moving your liquidity with the price, guys. You got to stop it. You're going to get liquidated. Godwell came in, provided liquidity, liquidated everybody on the high side. Richard Hart warned everybody right here. He warned everybody. It was almost like he was talking to me and my friends right here, because that's what we were doing when we were learning about some of the liquidity, which has actually happened over here and more in here. This is when ETH fees were absolutely ridiculous. And we removed our liquidity ourselves after this, and then watched this happen and went, oh, thank you, Richard. Appreciate you. Right. Thanks for allowing us to reduce our risk. Godwell came in, provided liquidity, bought across within a couple days, removed his liquidity, said, ha ha ha, suckers. Let everybody shake out, and then he did it again. As you can see, he put liquidity back to the same range, bought himself back up. He bought a hell of a lot more than he did even in here through these weeks. Let it go sideways, hoping that he would shake out, that this would happen again, right? It worked here. It worked here. It almost really didn't work here, right? This is showing community support. He said, fuck it. If the community is supporting this price at 8 cents, then even I want to see Richard Hart spark those candles, right? Light the green candles on his YouTube videos. Boom. We went up to here. This here, you know what this was, guys? If anybody can answer this, you get a pat on the back and a cookie. If you know what this was.
Sacrifice?
PulseChain sacrifice. Yep. This was PulseChain sacrifice right here. And then this was the 19 days afterwards. Right? This was the beginning of the first 5 days. And then the 19 days afterwards, where everyone was like, oh, like, make sure that you're sacrificing on the 19th day because we don't know what we're talking about. Wrong. You should have did it here. This would have been the best day for you to sacrifice. In July. Right there. But you get a cookie, sir. So yeah, this is the PulseChain sacrifice. And then up and up and up and up. And this is all God Whale doing all this. You guys can speculate who God Whale really is. I don't care. I'm not here to argue those types of things or tell you who I think it is. But whoever it is loves Hex, acts benevolently for Hex, just like the OA does. And if they were to buy any asset, as been said on YouTube, Hex is what they would buy. And they have. This was the top, the double top, Bitcoin double top, here and here. This is where Richard called the top on the day, right here. This is the one day, the Judas that went above, making him technically incorrect, but he can't always be correct all the time. And then here's our destruction. What everyone's chaotic, suicide mode, jump off building. Oh God, it's terrible. No, good buying opportunity. Other people trying to support, good buying opportunity. Better buying opportunity. As you can see, we're in our current best buying opportunity. We only have support to right here, guys. Right here. And as far as what liquidity suggests right now, there's nothing underneath here. Nothing. No support. No availability. If you were to have price go down there, it's going to look like this candle here. Wicked. This candle here. Wicked. This candle here. Wicked. At that time, there was no liquidity underneath here. We got that wick. As soon as we saw that wick, what happened? Market makers go, oh, okay, let's go support that price. See what happened to the price after they saw that and they supported it? You want 007. This guy here that sold hundreds of millions of Hex has already proven that the only way that it's going to be supported off of this here and this wick there is even this did not scare anybody. Because that is just at where our price support is at, which is right here, actually. At about 15.11. Didn't even get to there.
Did you say the wicks are support?
No, the wicks are the wicks.
Not support.
Yeah, the wicks are there because it wasn't supported, and they sold into high volatility where they got slippage. They incurred slippage at that point. This particular one here, I'll show you. That wick candle there is represented in this right here. Candle went to there, bottom of support, bottom of volatility. This is low volatility, mediocre high volatility, extreme volatility, which would suggest that this here also would be considered extreme volatility. Price bounced right off of this, where this cavern just dropped off there, which is this here. And as you can see, let me lock this in here, that the difference would be 13K, 13,400 per tick within this range there, to 26,000 per tick, which you can see. I hate that I gotta lock this. Oh, I just hit the wrong button. Which is shown here, 26K, 13K per tick, 26K. So that guy was selling an ass load. What happened is he went from current price, hit this, people started to buy because that got down below 1.9 cents and bounced it back up here. And as price was going up, this little lower volatility area actually helped push price up forward, kind of like a little slope up, right? If price starts going down, it'll be another slope down called a slide, right? This here is a slide. 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 A little bit of support, but not much. A slide into volatility. Hex trading would tell you all about slides. They love slides. They know where that shit's happening. But yeah, that was fun. Blast from the past, huh? These were the days which are coming again, guys. Like this here, which is actually more or less down here at this price, about 2 cents, 1 cent. Actually about right. Jesus, about right here, which we can't see on this screen unless I went to trading view, right, and looked at it. But it looks just similar like this, but actually back here in this timeline when it started to do this. From down here back at this time all the way up to here, can anyone tell me how much Ethereum was utilized? Does anybody know that data? I do. I just wanted to see if anyone else knows. How much Ethereum was used to go from 1 cent to 52 cents?
Was it like 30,000 or something? Because I know someone just recently said that. Yep. That it would take 30,000 ETH to move the price back up.
That's right. That's exactly right. 30,000 ETH. Anyone know how much Ethereum the adoption amplifier actually consumed, since nobody tracks the OA? Anyone have any idea? Over 1 million ETH. So this here, for all you guys that are scared about whether we're going back up there again, is nothing. This is nothing. This, I'm telling you guys, ain't jack shit as compared to the benevolent whales that are involved in this project here. 30,000 gets us from here to here again, all the way up to here. And we're talking millions of ETH. Imagine we had some more price appreciation on ETH. If it's still currently sitting there with 1 million ETH in it, and ETH goes up to 4K. What is it, 1,200 right now? That's $1.2 billion at current price. let's say ETH goes to 4K. That's $4 billion. Top of the bull run. This cycle, let's say none of it gets used. You're looking at availability of utilizing $25 billion. 30,000 ETH at, let's just say for good measure, say 3,000 was only $90 million to get us to 50 cents. And we're talking the potential of billions of dollars, billions waiting on the sidelines of gameplay that you guys don't know about, or you're not supposed to know about, or anybody's supposed to know. I'm not even supposed to know about, which are conversations that I generally try not to, I don't talk about. I don't want to talk about because I don't want to have generalized argument, and I don't want, okay, let me tell you this. There is a good damn reason why the term no expectations of profit off of the work of others is a motto in this currency right here. Because if you do good blockchain analysis on all this stuff and be able to track thousands and thousands of wallets all at the same time, you might land yourself in a category of having some expectations. What I know, you know, when people say, if you knew what I know, then you'd be a lot more bullish about stuff. I am one of those people. Am I worried do I think that Hex is going to fail? Nope. Do I think that Hex is going to do some amazing things in the future within the next 7 years, 8 years? Yes. Yes, I absolutely do. Do I think that PulseChain is going to rectify and prove that these things are possible? Yep, I absolutely do. We've already got hundreds of millions of dollars worth of stables that are all stacked up. What's going to happen with those funds? No expectations, guys. None. None at all. Do you think that they're not going to act benevolently with that type of stuff? Probably they're going to, whoever they are, right? Best case scenario, we just keep them in an anonymous fashion. We don't know who they are. We don't know what they're going to do. Best not to have expectations, but just stay strong. All the fudders that you hear, they don't know what we know. They don't look at these things. They don't pay attention to that. They're easily manipulated and generally what we would consider weak-handed. Or they're trying to manipulate you into not believing the things that you should know. And I'm not here to spread hopium. I'm not here to try to garner your favor in any fucking way at all. I don't care. I do not care. What I care about is where I put my money and where I invest my stuff. Try to educate you guys on how this stuff works, and then you guys can make well-informed decisions without having to listen to anybody else. That's the best case scenario. Don't listen to me. Take what I can teach you and then develop your own personal availability of thought processes on that. Don't go listen to technical analysis, guys. They're trying to manipulate you. They are trying to manipulate you into thinking that they can. There is no such thing as a person that can tell the future. Maybe some of you guys are believers, right? Believers that fortune tellers exist and that they can actually tell you that you're going to get married one day and then you're going to believe it. Well, of course, chances are you probably are. Chances also that you're probably going to have children. In the reality of it, they probably can't actually speak to dead people, but they can make you believe it by manipulating the sensibility that you have in your brain to want to already believe it in the first place. We watch so many Marvel movies and so many superhero movies and all that type of stuff. The more that those things get exacerbated, the easier you will be for you to believe that shit that can exist, that humans aren't capable of doing, that some human in the planet, one of them at least, is capable of doing it. Chances are they're just a con artist. I'd love to believe it too. Don't get me wrong, guys. I'd love to believe that somebody can act, Nosferatu can actually tell you that 100 years later that the Twin Towers are going to get taken down. I'd love to. But that's not specifically what was even said. It was other erroneous words that can be manipulated into the belief structure that possibly that is what they were saying, maybe. But why do you think that there's so many different types of Christian realities? Different types of Christian churches that kind of teach the same thing, but they just take one word and manipulate it to fit their own needs. Not to say there's anything bad with religion. That's not what I'm saying, guys. Ethics are good. Having good ethics, having good, strong family ties, sitting down with your children and asking about how their day was and telling them that they did a good job, but also letting them know that failure is okay as well, so they don't defeat themselves in their own right, is good. Having good ethical behavior is really, really good. But stick close to reality, for fuck's sake. Don't manipulate and trick yourself into thinking things that aren't true. That being said, no expectations, guys. Like, this took nothing to get there off of the available, what we've already had available through the adoption amplifier, through having an OA that's benevolent, through having a fantastic, brilliant mind like Richard Hart that can set all this up for success. I can't tell you what he's going to do. I can't tell you that he did this. I mean, I could. I'm not going to tell you that he did this. And I'm not going to tell you what this was for. This whole bear market thing, a shakeout, weekend, here, wick, weekend, 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 lots of weekends, even more weekends, probably one of the biggest weekends. That DO1 paid opposition, in my opinion. DO1 paid opposition, in my opinion. The availability of the shakeout, the availability of creating an environment where the market makers are going to deploy lesser assets to try to give a better availability for more shakeouts for the weak-handed. These green candles, maybe not in all essence, is just community members. They may be big whales that are causing for those things to happen. But for the most part, anyone who's been holding from way over here to all the way over here are some of the strongest hands that we have. And while all the rest of the herd is getting weakened and getting out, you have a large majority of people turned into a small minority of people. Way back over here in these timelines, 5,000 people at the beginning of Hex. Way over here, 100,000 people. Way over here, less. We go back up to here, it's going to be viral. PulseChain will be out by, I don't want to say by when exactly, right, within this period of time, but maybe hopefully before this period of time, 2024. Definitely by this period of time would be more likely, September. This period of time right here is where Ethereum has moved and pushed back their unlock period for unlocking their staked Ethereum. And this is also the period of time where Mt. Gox is going to start distributing their Bitcoin. This is where I'm going to start looking at more liquidity and seeing where the bigger players are deciding whether it's bullish or bearish, bullish or bearish. We've already had this period of time, which is 1, 2, 3, 4, 5, 6, 7, 8 months, almost 9 months now of practically sideways momentum, 6 cents to 1. Not much of a divergence in price. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 or 9. We could still be bouncing around between here by then. If PulseChain doesn't launch, how coincidental would that be if PulseChain was like, oh, we had to deal with some stuff, but we can't really tell you because it's actually ready right now, but we need to make it to September and not freak everybody out. We need to get over here. We need to get the ETH guys out and the Bitcoin guys out. We need to see what the market's going to do. Get them the fuck out and then off to the races, right? Boom. PulseChain chart, best chart ever. Hex chart, This top here ain't gonna look like, it ain't gonna be shit when it's up here. By the time we get down here and it's all the way over here, nobody's gonna remember any of this shit. Nobody's gonna remember any of this shit. Green candles are gonna start happening. Everyone's gonna forget about it when we're at $1 or something, or $3 and something. Spend 60,000 ETH, and we're already up here. Up here looks a lot better than down here. Nobody will remember any of this shit. Took 2 weeks for people to forget that 9/11 even happened. Let me remind you of that. Okay. Well, I think that's all I got for looking at these things. Like I said, going and looking at this chart here, talking about like what I was just talking about, doesn't mean jack shit. It means nothing, right? What means the most is this here. What is happening now? What is going on now? Where are the market makers providing assets on the high end now and on the low end now? Where can price be derived? Here? Really supported here? Really supported here? Mostly supported in this area that we're currently bouncing around in. What did I say before? We had 6 months between 6 cents and 1. Well, look at this. 1 cent, close to 6. You think that these guys have moved the liquidity much in the last 8 months? Probably not. That's why it looks so choppy and all fucked up. Because prices have been moving across this whole area for the last almost year now. You know how much fees these guys are getting? Lots. Pretty much all of them. Because Hex has been the majority of correlated to USDC for the majority of that time, especially during the bear. Not towards Ethereum. Why would you connect it towards Ethereum when Ethereum has been dumping from 4K to 800? You wouldn't. You'd connect it to a stable, just like they have. These guys are smart. They know exactly what they're doing. If you could suggest that maybe somebody could read the future, these guys just look like they've been through cycles before. They know exactly what they're doing. That's why I put my bets in on these guys. Whoever these guys are, they know what they're doing. Needless to say, same guys that do all that liquidity there, they may not all be in here yet, but some of them are, and they're in here. They're doing this too. They know what they're doing. Smart guys. And eventually, same thing's going to happen here too. Same ecosystem, same assets attached to each other, same people providing liquidity, same market makers. They know what they're doing. I can't say so much for other assets. Okay. So there you have it. Anyone have any questions?
Oh yeah, I didn't want to interrupt before. I was going to ask you, dealing with Godwell, has he provided a lot of liquidity in the past, or is that like a usual thing that he does?
As far as my understanding, no, he's not like a major liquidity provider. He only does it when he needs to be able to make purchases that's more than what liquidity actually suffices in the first place. And then he removes it after he's moved the price to cause for volatility to happen underneath the price that he left behind. Very, very, very smart character. Yeah, very smart. He or she, who knows, right? We don't know. Could be a woman, I suppose. Just like the reason why I won't make a statement like Godwell is Richard Hart. I don't fucking know, and I'm not making that statement either. I've heard a lot of people say that, but who really fucking knows? Like, it could be, but it could not be. So don't say that shit because you could be wrong.
Yeah, it's going to be interesting to see at the end of the stake if he does end it or if he lets it ride for a while.
I mean, I think that, you know, knowing that the Godwell doesn't generally have like do liquidity providing, that we have like enough time for other people to do it, right? And as the share rate goes up and you know, you get less assets for staking, then what I'll see is like, okay, if you're making on providing liquidity fees, making somewhere between 0.5% a day, right? Then then you're riding right up there with about what your normal rate would be right now for staking, right? About 182.5% APY a year, right? Which is about 0.5% a day on APR. That's really good money, really, really, really good money on providing liquidity, but there's just not a whole lot of volume, right? So if there was more volume, then it may incentivize you to try to get that 0.5%. But the price of Icosa being at 60 some odd cents, if you're making, you know, 10 Icosa a day at 60 cents, that's $5 a day. That's quite a few T-shares that you'd actually need in Hex to be able to get it. So they're rivaling each other in a good way, not a negative way, but still, Icosa right now doesn't provide a whole lot of incentives to provide liquidity. But as the share rate goes up and more people start learning about providing liquidity and doing these types of things, then you're going to have more support on all sorts of price ranges, which is good. So Godwale may not even need to. Like, if he wants to come in and increase the price of all the assets in which he or she is holding on to, then he can do the same thing that he was doing with Hex, right? Or they can take a large majority of their Hex that they currently have and a large majority of the Icosa that they currently have and go to another pair that I'm not showing you guys, which would be the Hex Icosa pair, and correlate those together more than the USDC pair. Let's say taking $1 million and just stacking it on there. Now the router, every single time someone makes a transaction, is going to the Hex Icosa pair and then trading for one or the other and then going to the USDC pair and then spitting out whatever they wanted on the other end. Meaning that the Godwale at that point in time, or whoever did that, is getting all the fees, which is fine. And then they can go ahead and use those fees to provide liquidity elsewhere, or they can not even buy any Icosa at all, like because you correlated and connected Icosa and Hex together in such a large way that you can go do what he normally had done, is go provide a bunch of liquidity in Hex and shoot the Hex price up and then watch Icosa just fly with it, because he's already correlated the two together between Icosa and Hex through $1 million versus the 100K that's currently there, or 200K that's currently there. And then not even have to buy any Icosa at all and still get price appreciation on your Hex and your Icosa. And if Godwale is who I think that they are, possibly, they know this. They know this already.
Good times ahead.
Yeah. I mean, we don't call it Hart's Law for no reason at all.
Yeah.
It actually works if you do it right.
The bear market malaise has already been washed out of me. I can feel it already.
Yeah, it's coming to an end.
For
Whether
sure.
it would be 6-7 months down the road, like in comparison to the last year and a half, we're on the outskirts of it, right? So
Oh yeah,
we're getting there. And quite honestly, I kind of, you know, hearing about, oh, PulseChain's around the corner, it's like, fuck, right? Like, I want to stack up more assets while they're cheap. You know, I'm kind of on the reverse side of everyone else, I guess, maybe.
no, yeah. Anything under 10 cents was freaking gold.
Yeah. But that's always going to happen. It happened when Hex went from a penny to 3 cents, and then 3 cents to 6, and then 6 to 9, and then bounced around underneath 10 cents, where we're all like, light the fucking candles, it almost got there. And he's just kind of laughing, right? Richard was laughing at everybody. And then we finally broke the 10 cents. you were already seeing people at 5 cents being like, man, I was so happy with buying Hex at 1 cent that I'm not even going to buy at 5 cents. And now those people, now look at them, they're all buying back in at 2.5 cents now, right? It's like you got your whip.
I can't. Yeah. I can't wait for the $1 candle lighting stream. That's what he said the last time. He lit the candles at 10 cents. The next stream will be $1 for the candle lighting. The candelabra.
That's right. That's right. Oh, thanks, Siggy. I didn't realize that you had included the video for that. That's very helpful. I guess it would have been nicer. I couldn't watch what was happening in the chat here to see when you came in. So I have no idea what you caught. Hopefully I went over enough of it at the time to be able to catch the majority of it, other than you sitting here listening to me talk about God whale and the rest of that garbage. Like the meat of the bones were in the charts and the liquidity versus price.
She doesn't.
I'll do it again. I just I got a little over anxious, I guess. There was like 10 people in here and I was like, let's start. Fuck it. Right.
Here's the thing, like, I don't know if a lot of people realize like how much golden alpha this is. Like, people are out there utilizing this information even before you, like, and your information and monetizing it. And I know when I got into crypto, people who knew nothing were selling courses for like $1,000 to $2,000, which wouldn't even have any of this information. So it's just amazing, like what you're saying in here. I don't know if people realize how amazing this is.
Yeah, Hexecutioner has talked about that so many times before too. It's like, why pay for it when you can just come and just listen to me, and then make your own decisions from there, right?
Right, but I also I've already said this before, Hexecutioner, way back months ago. Like, you've got to have a donation address. Because again, like, you take this time out, and I know that with this ecosystem, like, that's one of the things that I really love about the whole Hex PulseChain ecosystem is that, by strengthening the foundation, the core foundation of a lot of the, faithful, loyal users, you're building a solid foundation for the future, and people are going to be able to protect the price and etc. So it's smart to give this out. But I just don't like when people leverage this information and make money off of it.
That's actually not a bad idea to put a donation address in your profile.
I might. Yeah, I don't. I'm still gonna keep doing what I'm doing anyway. But I mean, if you guys are so inclined to help me out in any way, then that's fantastic. And I will say this is funny. This is funny to me. And I'll make this statement. If I was to have like a group to expose people to cryptocurrency that was like, I don't know, this $100 a month type stuff is astronomically high. Like, I wouldn't pay that. If it was like $5 or $10 a month, like the cost of your Netflix account, then I would probably do that, knowing that whatever they're in there to teach me, they're not teaching me anything. I wouldn't really be learning anything because of I guess, like the people that I have around me and how I've learned myself and be available to become the teacher myself. But I wouldn't even be teaching these things, right? Like you'd have to start somewhere, and the exposure to cryptocurrency for this, let's say it was a $5 or $10 a month charge, would be teaching people about wallets, like basic ass, really dumb shit to us, right? Like, this is how you add a currency to your MetaMask wallet. These are the types of wallets that you'd be involved in. You want to get Bitcoin, these are the types of wallets that you'd look at. You want to be involved in Phantom, which, I mean, I would even have to educate myself on a lot of the stuff just to be able to bring more content to that type of thing, which I don't have time for. I'm not going to do that. So I've already thrown that out the damn window. I'm not going to even do that. If I want to bring exposure to people with more cryptocurrency, then it'll probably be my local area like I normally do, like go to talk to hedge fund guys, right? Go to bigger cities and set up meetings to go talk to them where I can actually bring my laptop with me, pull up my phone and show them what apps that they need. Get them to download the right shit, not the ads on Google and have the wrong stuff, right? Teach them security, like positionings on how to walk through this ecosystem a little bit easier without having to be worried about stuff. Kind of generally set them up to be like set it and forget it type stuff, right? Not have to worry about looking at charts and the rest of the stuff, and really kind of lay down like the nitty gritty, so there aren't so many gray areas with what they know. And then I'm still not charging them. I still wouldn't charge them an hourly rate or a fee to even have the meeting in the first place. Like, I don't, right? The only thing that I would do previous to going to those meetings where I know that those guys are going to spend hundreds of thousands of dollars on buying hex, because when I expose people to cryptocurrency, I expose them to our ecosystem. I expose them to our community. I don't expose them to Bitcoin. I don't expose them to Ethereum specifically, other than this is what you need to be able to do to be able to get to convert to these other assets, which hopefully that's not always going to be the case. I mean, I know that you can use a credit card now, which is something that when I do start to go back into doing those things and I have some more free time with my other local guys that do that with me, it would probably be something that, you know, we'll bring to the table with as well, and just avoid altogether the Ethereum, having to buy Ethereum and converting and doing the rest of that shit. But because I do that, like, I know who I'm exposing to cryptocurrency. So if I know that they're going to spend a couple $100,000, then, you know, I've been buying hex already for a while, right? I could go buy more hex, wait for them to cause a green candle, and then sell a couple $1,000s, right? Like off of, you know, a percentage of whatever I had gotten. And then there's my fee. I don't even have to charge them anything, and I don't have to dump on everybody's fucking heads, right? And I can just extract a little bit of value, 10% off of the top, and then be happy with what I had done, and then move on, right? And now we've got more people. And then after I've taught them how it works and why you shouldn't be worried about stuff, I tell you, I don't get phone calls from my onboards about, oh my God, prices are going down. You fuck, I can't believe you got me involved. Never. I never, ever, ever get people that are worried calling me about maybe they made the wrong decision, ever. I don't, because I've already pretty much put that all in front of them. This is what can happen. This is what will probably happen. This is how it works. Go look at the S&P 500, then come back and look at crypto. And then you'll see that it's all correlated. Like, yes, S&P 500 has a bunch of companies that are there, and only maybe 3 or 4 of them in the industry in which you're going into might actually survive, leaving you with the shotgun blast of not really knowing what you're getting into. But with cryptocurrency, since it's all correlated to it, all you need to know is what communities are actually there and are going to stay there, which founders are legit and know what they're doing. There's not very many cryptocurrencies that you can have those 4 things. Not very many at all. There's like 15,000 shit coins that are out there that are ready to take your money and run. The ecosystem that we're currently in has some very intelligent motherfuckers in it, and they know exactly what they're doing, and they're not afraid. If you see prices going down, it's a shakeout. You see prices going out, it's a shake-in. That's all it is, every time. And they know that it's happening. They know what's going to happen, and you don't really have to watch it all. All you need to do is buy some assets, use the protocol, stake it, and forget about it. Go put it in a hard wallet somewhere. Go back to work. Go go to school, go get some education, go learn something, get a trade, go get some skills, use your time, go spend it with your kids, with your family. If your parents haven't died or your grandparents haven't died, go spend some time with them. You won't regret it. You don't need to be in here every day like the rest of us are, trying to wrap our heads around how all this stuff really works. When you get involved in this ecosystem, you can really relax. You can. And I suggest that you do. And that's what I got to say about that. Suckers. I know that I've been on the last 2 days, and don't get used to that, guys. Like, I'm trying to be more responsible with doing what I just said, spending more time with family, spending more time with this. I just recently had 2 deaths in my family, and it's kind of pointed out some of my own weaknesses that I had that I'm working on myself. And it has also opened my eyes on how much further that I need to envelop the education with you guys on how to more appropriately explain these things and wrap our heads around it together, right? Like, I don't need to wrap my head around it. I need to unwrap my head around it and put it in a more beautiful, more eloquent way, other than just talking and hoping that you're getting it. I like to have, I'm going to probably do some more screen sharing stuff. It's, for some of you, it's going to be the same thing over and over again, right? But just new liquidity, new pricing, new whatever, with what's currently happening with the markets. And I'll probably have to open up some more pages, so when I actually go into some of those web pages that I have, I might start opening up towards the S&P 500. I might start opening up towards Bitcoin and Ethereum, so I can actually start showing you guys. Sorry, Crypto Chino, I'm not the one that runs that account. So if the feed cut out, then that's on Siggy. Yeah. The community, see, that's what I'm saying about this community. Like, I don't even have to do all the work. We've got community members that support all of us. It's fucking awesome. You guys are all amazing, and I appreciate you guys. Back to what I was saying, maybe I can help to try to show some more correlations as to why every cryptocurrency that you see, all the charts look the same, and kind of show you where crypto was decorrelated from the current markets back in 2021, November 2021, to today, where it's completely correlated to the legacy finance markets. I know right now I'm talking, and when I go back into that, I'll probably pretty much say the same thing, but I'll click through a few pages and show you what I mean, and then you guys can be like, oh, I see. Okay. So, and that's pretty easy to see, right? And then I probably won't go too much further into that. Like, I'll just kind of show you what I look at, so you guys can do that on your own. And hopefully through a certain period of time, that a lot of you guys that are involved in these chats that are looking at stuff, you won't have to feel like you missed anything, right? You won't have to go to the YouTube channel and like go through hours of me talking about stuff and showing you stuff. That you guys can already have these web pages bookmarked on your own browsers, and you guys can start looking at these things on your own. And then, we'll all be the teachers, right? And we can all start doing these things. And if you're not sure about certain stuff, like, do ask the questions, guys. I don't know everything, but I will do my damnedest to try to envelop what you're trying to understand better for you. So that way, if you're like, oh, I want to be able to onboard people, but instead of actually teaching, like, I can't do it like Hexecutioner does. I get this all the time. I can't do it like he does, but in reality, you guys can. You can. What probably happened is that I don't want to use the word dumb it down, but I didn't eloquently portray what I was talking about well enough. And you guys just let me do that to you instead of being like, could you go over that again in a different way? And I will. I'll slow it down. I'll try to use more data, more stats from someplace, and try to make more sense of what I'm saying and show you. So that way, if you want to try to show your onboards these things and how they work into the less complicated, maybe even more complicated side of stuff, then absolutely let me know. And we can go over that type of stuff. I probably more than likely won't do one-on-one consultations, because I feel like private conversations are not something that we as a community should get used to doing, because it leaves you open to manipulation. And I think that it keeps us honest as long as we are in a public fashion, right? I'm not going to bullshit you. If there's something that I don't know, I'm opening my risk to speak publicly about it, because I have no idea what you guys know, if that makes sense to you.
I was just going to say, like, and Chris, I know I see Crispy's on here. Maybe I've never set up a Patreon, but maybe like if you're not wanting to do private, like, because there is an aspect to where I won't say anything because this is streamed. So maybe having like a Patreon where it is $9 and doing like a group type of setting where we can openly say what we want to say, without it being recording for the public to hear what we're saying. You know what I mean?
Yeah, that way you're not exposing yourself to private information on accident without knowing that it's going public. Yeah.
Right. Or just in general, like there's things that I want to ask you that I don't want to be recorded, because I've invested the time to be in this chat for over a year now. You know what I mean? So I've learned stuff, and I want to help people, don't get me wrong, but then there's other people that'll take that information who I know are monetizing it and make it their own. So that kind of agitates me, because they're doing it in the intent to build their brand. And that's like, what? No, I don't want that.
Right. I'm sure that you can imagine that my frustration hits a peak point as well sometimes. But like, if I express my discontent in that type of stuff and then become one of them, then I'm just as good as they are. I'm a hypocrite. And
right. But the amount of knowledge that you're, like, I'm not saying to completely, that's what I think I love about this chat specifically when I came into Hex, is because we were able to actually be newbies and ask the dumb questions and feel comfortable with it and learn even further. But I get where you're coming from, because I also go that fine line, like, ooh, Hexecutioner, you have to be careful. I know how to run social media accounts, and I know what, especially this is recorded, so I'm not going to say what I want to say, but I just know that you have to be safe. So there is an element when you do charge things, if it's private, I don't think it's against you.
Yeah, I completely agree. I'd have to agree with that. But then again, I don't run social media accounts. I'm hardly ever on Twitter. I do go on Twitter and support some things on there. But hell, I spend hours inside this stuff, inside just Telegram alone, exposing myself in a very appropriate way to the community here. And I know that I'm cutting myself off from making myself really available to a bunch of people, because I don't want to limit my time, right? Like, there's a few of you that in DMs that I have spoken to a little bit more intimately about stuff, where we can be a little bit more private and speak specifically about certain assets and certain things, and where and why you would do what you're doing based on what you have and what to do with it. But I try very diligently not to do that too much, because then I would never be in here. I would always be in the DMs, constantly trying to keep up with people's individual needs, which is tough to do, right? But there are some people that I make time for sure. Do you have something to say, JJ? If you're talking, JJ, I can't hear you. Maybe I embarrassed him. He just left. If your mic opens and I'm paying attention, then I'm going to allow for you to speak. Okay. Plus, I think I've been up since 6 o'clock this morning, kind of preparing some of those things to be able to do the screen sharing stuff. So I think I'm running out of steam a little bit myself. I'm running out of coffee. It's about lunchtime, so I'm getting hungry. So anyone have any questions, any thoughts, any expansions of thoughts, outside the box thinking, conspiracies? Anyone have a Hex ecosystem Richard Hart conspiracy that they want to throw down on the table?
How about I annoy you with the thing that's probably going to annoy you? Dev Huey just posted something about compounding the Icosa yields, the common question that keeps on getting asked. What are your thoughts on all that?
Oh boy. I would say that depends on the individual. When you started your stake and what the share rate was at the time. If you're doing 30 to 90 day stakes, then the share rate probably hasn't moved far enough for you to be too worried about it. So ending a stake and recompounding from one wallet to another is probably a good idea. A 30-day stake, probably not a good idea. 90-day stakes, probably a better idea. And as far as what I'm noticing off of seeing a couple other things is 180-day stakes are probably the best idea. So maybe have a couple of wallets that are 180-day stakes that you plan on actually running through the 6 months for it. Maybe making a couple of 90-day wallets to compound those into each other. And then watch your share rate. Watch the share rate to see how much it's moved. Do your calculations before you actually do an in-stake function. And then make that choice on the day that you're going to do it, right? Set everything up so you have options through multiple timeline stakes, 90 days, 180 days, maybe even 30 days, who knows, right? Give yourself the option for those things, but also know that you're not really sure what your next plan of action is going to be until that day has come, right? Another thing to think about is like on day one, like me, I staked on day one. So I knew that some of my wallets that were 90-day stakes, which were when the squids were going to come out, that if I were to end my stake at that time and reappropriate another share rate, then I was kind of shooting myself in the foot on my pool, on the amount of pool that I had. So instead of ending the stake on the day, I waited maybe another 10 to 12 days because the auction started kicking in. And I was very thankful for doing that on a couple of my wallets because I was able to extract all that yield with my original share rate. That was a very good position to understand that was going to happen and then take advantage of that when I could. And then as it started to die down, then I made my decisions on what I was going to do based off the share rate. But within that first 90 days, the share rate moved a lot, right? I think there was 2 big jump ups of, I think it moved ahead like a couple hundred share points within those periods of time. And I think on Crispy's site, you can see from the beginning of Icosa between those first 90 days that it was, you're going to have to do the math to find out whether it was worthwhile or not for you to do it.
I was going to mention, I know a place.
Yeah, hexfire.io, great statistical place.
Hey, on that topic, I don't know if it'll play out or not, but February 16th, you'll see the jump. Maybe another 700. Well, from here, where are we at now? We're at 620, 25, 627. Yeah, so it's gonna be about 700-800 hex. Now that
Is that,
depends on what. Okay.
sorry, is that because of what the Godwell did with the 45 stake?
Absolutely not. Nope. Nope. Even even with his stake, I'll have to go check and see whether he'll push it up any further. But you know, think of it this way: we've got these long-term stakes that are out there that build up an awful lot of ROI, and the amount of yield you get really defines that new share rate calculation. And so we have a lot of these changes that are already pre-programmed in because the stakes are made so long ago and have gained so much. So the big changes are likely the older stakes, almost entirely, I'd say. And then in the in-between, like when the Godwell came in, his stake may actually bump it up, you know, 10 or 20, but it won't be 700. Not for a short stake like that. And from what I've been seeing, we should be a little bit higher than we are right now for share rate, but we had a 60 million hex stake was expected to end back on the 20th. And the guy put through a slow transaction to good account rather than end the stake. So I don't know, somebody with 60 million coming out, maybe they know something I don't know by good accounting.
Maybe they wanted to file their tax forms first before taking on that burden.
Yeah, perhaps.
Yep.
But yeah, you guys can go see that. And then for, you know, execution, I know you said the other day when somebody asked you to about ceiling prices and stuff, and us not talking about, you know, projecting exactly what pricing will do. And I get that. But I you know, even though I have this data, you know, sometimes when I go look at it, I'm like, oh, damn, I didn't quite realize that. And so that's why I posted in the chat, you know, my numbers show that even at the current hex price, the Icosa ceiling would be over $3 at the end of the year. And that made me start thinking pretty bullish, you know. And that's before price appreciation.
Right. And I was looking at your charts or your Hexfire, and I don't know what else. I think it was Dev Huey's. And that's why I kind of question you about that executioner, because I haven't yet. I've heard a lot of people on the Icosa, because I know we've talked about it before in the beginning and a couple times along, that compounding, you know, the options were compounding or just let it ride. So I know a lot of people are leaning towards that 180, but when you look at like the gentleman that just brought in the 300 HSIs, we've got auctions now 2 months in a row, heavy duty auctions. So why, I think at the dolphin level, like you'll get diluted in the 6 months more than you would if you compounded, but then you lose the ability to have that liquid if there is a hike. So, I mean, there's so many different things, but then you've also got the T-share rate going up too. So there's so many things to account for.
Yeah. Yeah, and I think, you know, when I speak about the ceiling price and stuff, it's math, you know, so, and the math is that the share rate goes up. You know, there's no way to get away from it, you know. Yeah. So I guess what you're saying, executioner, is keep track of it, figure it out for yourself.
That's right. Yeah, best to do the math when it comes up to it, and also realize that the more people that are getting this best to compound, you should end that stake and reappropriate your share rate, compound that shit to another wallet. that without doing anything, if you're a person that isn't compounding and went long term, right? Like some of my wallets that are long term, those wallets are gaining share rate as you end and reappropriate your share rate at a higher rate. Regardless of being diluted, I'm still gaining pool position. So without actually taking a step on the ladder, you're giving me the elevator up. I just hit a button and let it go, and it goes up while you guys work backwards on the ladder and then try to give yourself a one up with it, which I've seen the data that suggests that compounding is a better opportune way to extract more money based on whether Icosa price goes to here or here, right? I think someone was saying that you can make $1 million if price was here or here off of your compounding, versus if you didn't compound that you'd make $750,000, a loss of about $250,000 if price went to here. That's fine. But in the long term of it, like who's actually going to, over the long term, garner a better pool position? The guy that started at day one with the share rate being the lowest it ever was, or the guy that's just getting in and learning the compound situation where the share rate is now 30, 40, 50,000 hex per share versus the 22,000 that I started at? Who's going to get more Icosa in the long run, really? You guys are banking on a lot of variables with your compounding, though the auctions keep coming in. How many people are going to actually overspend on those auctions? How many people even have enough Hedron at that point in time to be able to overspend on those things, to be able to win them at that time? All things that I would take into consideration through multiple different wallets that I have. Like I said, best case scenario is keep yourself available for options. Do some compounding, but also run long stakes too. Different type of ladders. Go ahead.
Sorry to interrupt. I've been kind of skeptical of the compounding strategy for a while, and what's staring me in the face is the Hedron pool is measured in T points, whereas the Icosa pool is measured in M points, and that's just terrifying to me. To pull out my Hedron liquidity or my Hedron stake and watch it lose 10-15% of my T points to gain I don't know how many M points in the Icosa pool. Because I don't there hasn't been I don't know how much of this whole game theory has been reliant on the Hedron Icosa point system yet. And I don't know, I feel like that's a pretty important metric considering how hex is measured in share, and it's the whole share underlying share system in hex is like the most important metric to be paying attention to. But my question, do you guys, and Crispy, I don't know, I can't see it on the site if it is available. Is there a calculator that shows, what your share rate of, or the amount of T points you'll get if you staked a certain amount of Hedron today? I don't see it on Hexfire. I don't see it on Hex Model. I didn't know if one existed and I'm missing it.
Look into Hedron.
Yeah.
Crypto Sloss.
Cool. I just watched a video on that the other day. I haven't visited it yet. Thank you for the heads up.
I was just opening up a wallet that I have that I don't have any stakes on because I got so many fucking browsers that's ridiculous. And open up a app.icosa.pro and just start punching in numbers. And it'll tell you everything right there.
Right, because if you don't do it I'm doing both ways, because if you go to stake and you think it's what's actually on that site, it may not be. It may be a little bit more, a little bit less, and then you have to factor in other people. So
Yeah, that's probably pretty obvious strategy. Sorry, thanks for pointing that out. So what do you guys, it sounds like executioner, you're valuing the T points a little bit higher than say Mike is. I what are your thoughts on um, preserving the points and your share of the pool versus compounding and getting as much of that Icosa as possible right now?
I know that the system is reflexive. The more people that go one way, it puts the advantage in the hands of those who didn't go that way, and vice versa. So that's why I speak about having options. Don't maximalist yourself into one area, because it may hurt you. It may be the best advantage that you ever had, right? But chances are that if you've got 3 options and you throw yourself into one of the 3 100%, that you're either going to be the biggest loser or the biggest winner. But if you spread yourself across the 3 options, you're at least going to win in some sort of way. So to make multiple wallets is a good thing. And who knows what Alex may do in the future, right? Could you imagine? Now, this is not me saying that I know anything at all. So if this happens, it's just by coincidence, okay? So let's not go too far past me just saying that what I'm about to say would just be a miraculous coincidence, okay? But at one point in time, we had native staking with Hex. And with that native staking, when you made a stake and it went into a wallet, your security of that wallet was of the utmost fucking importance to you. You can't move that stake from that wallet. If you made a 15-year stake, you are going to be holding that thing as close to your chest and scratching and fighting people off of it, scammers off of it for the next 15 years, right? Hopefully the hardware wallets that you put those things into and the safe that you have it in are going to be able to withstand the test of time. Alex came along and created Hedron, where you're able to tokenize those stakes, and at the whim of a tokenization, you can move it from wallet to wallet however you see fit, giving you a better availability of security and means to be able to control your assets however you see fit, right? Which is awesome, in my opinion. Fantastic. Availability of utilizing more utility for your staking. Right now in Icosa, same problem like the native. You make a stake, it's stuck there, right? You can't tokenize it, you can't move it. You're now fighting again any scammer from that wallet address. Who's to say that Alex doesn't reincorporate again with another Hedron on top of Icosa that allows for you to tokenize those particular stakes and move them from wallet to wallet, and giving you another availability? I don't know, maybe a year or 2 down the road, after Icosa's had some time to be able to appropriate itself as a valiant asset to have in the community, more than what we already see what it has the potential to be available to do. He's already done it once. We know he has the potential to do it again because he's already done it. He's the man that's made it capable. So I like to keep those options available with what I know the potential of the founder to have, and keep that in my mind, even though I know it's not available. But this guy is very, very smart, very intelligent, very slick. And if he wants to do it, he will, and he can, and give you even more utility to Icosa than you ever knew was actually possible. And then you have another asset that's attached to it, giving you free mintability to that particular asset if he wanted to, and another availability to borrow. He doesn't have to do that. He could just add another smart contract onto it that says, hey, instead of going to app.icosa.pro, you go to app.icosa.com, and now you can have this extra added layer that allows for you to tokenize these things. And thank God you guys made all these wallets. So now you have multiple stakes from that, and you can develop those things into 1 address, 2 addresses, however you want. But anybody who was under that same assumption that the only way to really do it is to make 1 wallet, don't do a waterfall strategy, don't put yourself in a position to have options, then you're going to be racing behind everybody else to try to get an availability to have multiple stakes of Icosa then at that point in time instead of the one that you had. So that thought process was part of the reason why I actually did make multiple wallets. It had nothing to do with the waterfall strategy. And yes, I did absolutely take at utmost consideration to the share rate because it's very important. The share rate is very, very important.
You know, couldn't he, I've also thought of him, couldn't he, because he's kind of like a perfectionist, it seems like Richard, where he could just fork it and bring those bonuses back into play, you know, fix the code on that, and then also make it like an HSI, like where you can tokenize it to transfer. I've thought about like, what if he does that after the seeded liquidity ends? A little bit time after that to be like, okay, those that were, you know, maintaining, it would be smart. Do you think that's a possibility?
Absolutely. Yeah. Any of those things that he's already done is more than likely a possibility for sure. But Alex, like, even though I'm an admin, the rest of us admins that are in our own private chat where we talk about stuff, he doesn't tell us either. He tells us nothing when it comes to any of that. Like, I can only think of 2 different times where Alex had told us something and was like, don't tell anybody about this. And it was so insignificant that we were like, why would we tell anybody about that anyway? It doesn't even make any sense. And then later on, from the big picture of the stuff in which what he was talking about made sense to why he said, don't tell anybody about this stuff, these particular things, right? Whatever those things happen to have been at that time that is no longer relevant because now everybody knows, right? So I can't even really tell you exactly what those things were. But very, very, very rarely, like in the past almost year now, has he ever put us in that position to be holding on to some cards that he shouldn't be handing out to anybody. Like, we didn't even know about Icosa. We had no idea about it at all. We just knew that it was really hard to get a hold of him, even as us admins. Nobody knew, like, everyone was constantly asking about Alex and where he's at and how he's doing and all these things. We didn't know. We had no idea that he was chomping away at the bit with all this code and spitting all this new stuff out to be able to create Icosa. But what we also didn't know is that Icosa wasn't something that he was like, all right, Hedron's out, it's working okay, we fought through the FUD, now I'm going to make Icosa. He even explained to us that Icosa was always on the table, always something that he was working on. And he was able to explain that very, very easily to show us that Icosa wasn't an afterthought, because if you go look at the Hedron code itself, it has code that's in it to allow for Icosa to exist. There was already code in Hedron that was the extrapolation of other code that he was writing in the smart contract for Icosa for them to communicate back and forth to each other, which nobody even caught that. Out of all the programmers and developers that we have in this community, nobody caught on to that until he was like, look at this, guys. This is the proof. See this here? This is what it means. And this is why I needed it, to be able to speak to the Icosa code when I developed this and actually unleashed it as a smart contract. Ha ha ha. I was really worried that somebody was going to see that and ask me, like, why is this here? But nobody caught on to it. And we're like, damn, dude, you're sneaky. Like, holy shit, you're fucking genius in that respect. So I think that, like, I haven't heard anybody look at the Icosa code and go, there's something in here that's like future dated for other stuff, right? And he hasn't said anything either, right? And I haven't seen anybody dig into it to see if there was, which there could be. There may even be something in Hedron itself that isn't attached to Icosa that's future dated for the allowed availability for communication between a totally different contract that we're not aware of. He's already done that once. He could do that again too. There's so many things that he's allowed to expand this on more utility, more new things, like new stuff, not take old contract code and then make a coin like like the Maximus guys had done. No shame in that game. I'm not knocking on those guys, right? But they're not really developing anything new. They're just extracting value from things that already have value, and creating a availability for you to take a strategy and maximize that strategy to the fullest. But even I just not too long ago, maybe 10 minutes ago, was just saying, if you have 3 options and you throw yourself 100% into one, you're either going to be the biggest loser or the biggest winner. Best case scenario is spread yourself across your options and do them on your own. Alex has provided the opportunity for you to, as an individual, be able to win. You don't need pools. You don't need all this other stuff that's coming out there. You don't have to. But with having Maximus, the Maximus team out there doing that, they do give you another option to be a part of that and to do that. So there's no shame in that. I'm not like I said, I'm not knocking on them. It's great that they have these other options to be able to develop a maximalist type of strategizing for doing that, which is great because that's how the code and the protocol is supposed to be used, right? But Maximus doesn't incentivize the code to be used to its most efficient way, which is 5555, as much hex as you can get into it, try to grab your shares. That is as much money as you can get packed into it, as much assets as you can get packed into it to get a bonus. And it, even though they did put it that one, the Maximus one, which is the best one in my opinion, to a 5555, is because they've actually, that's the best one in my opinion. The Maxi, best one. The rest of them, not as good, because it doesn't maximize the availability of the efficiency of the contract itself, which is the hex protocol. It's great that they got people to lock up more hex for everyone else that's not doing it. But the best one that you could have got into, they can't do any better, right? They can't do any better past Maximus, past Maxi, in my opinion. That's just my opinion. They do have all their derivatives and the rest of their stuff that they have in there. But that, in my opinion, is just a pyramid scheme to be able to envelop over a long period of time the availability for people to extract value from their own community into team staking, into the team coin, which they don't even provide any liquidity for people to even see that that's a thing that they should be getting into for that ecosystem over there. And they don't promote it. Like, I don't get it. I don't get what they're doing over there. It doesn't seem genuine. It seems kind of disingenuous to not like really put the spotlight on what they're doing and where people should go. It seems like they know where the spotlight is. They're intentionally not telling anybody, and they themselves are going to be the ones that put themselves in the position to make it big on that. Unless you come into this chat and I'm going, and I'm the one telling you, here's the spotlight, guys. This is what they're doing. I don't know why they're not telling you this, but the only ones that you should be really getting into is Maxi and probably Team. The rest of that stuff, I don't want to say garbage because that's toxic, but it's just not as good. And they're not, unless they go develop something that's like next level, like stepping across the edge into new stuff, which I don't really see. I think that Dipcatcher is a coder. Do I think that he's an Alex level coder? No. Do I think that he utilizes and leans on Alex a lot to be able to try to get anything that he currently has out? Abso-fucking-lutely. Do I think that he's going to be the next Alex? No, I do not. I see other developers that are out there that do have the capability of doing those types of things. I'm not going to tell you who they are because I don't promote for other things that are outside of the ecosystem. I'm not a PulseChain admin, so when PulseChain comes out, maybe I'll talk more about that stuff. But for right now, I'll just sit in where I fit in here in this ecosystem and just kind of talk about these things. But Alex most certainly does in every way, gives you the availability to branch out as an individual and try to do your best to succeed in every way possible as an individual without the need of staking into pools and not get educated on where you should be looking. In Alex's ecosystem, it's best that you do have the availability to be educated in every aspect of it. so you know where you can go and what your potential is for what you're doing, which is awesome because it also allows a person like me to come in and develop this educational platform to teach people about how this stuff works, how liquidity works, how we derive pricing, why it's okay to get into Icosa, why it's okay to get into Hedron, why it doesn't hurt Hex, and how they pull each other up in certain respects, and how they allow each other to protect each other without the absolute need of just relying all your security into an OA or an SA. You don't have to. Like, just having a community of people who are utilizing the assets and utilizing the protocols is already garnering you a very large success rate, which is great. And as far as like when these things first started coming out, like Hedron, when it was first, before it was even launched as a smart contract, we were already talking numbers like percentages that would garner you any amount of success rate. And they were very low, like 5% adoption from Hex stakers, because that's who it was going towards, was stakers, not liquid holders, was going to garner a success rate in any way, no matter what you did. And I think within the first 60 days, we were already looking at, this is after Hedron launched, an adoption of about 30% of all stakers already being involved. So that was of 6x of the potentiality of having a success rate that we were all like, holy fucking shit, this is amazing. Even though we were going through all that FUD and all that shit. Matty Allen just losing his fucking mind, right? And saying all sorts of weird shit, right? And other people who did say some weird shit, they have corrected what they thought, and now we don't have any of that. Like, Hedron's in the clear now. Like, even Richard has made mention of it in a couple of streams where it wasn't technically support, but he definitely did say in a supportive way that as far as his ecosystem, Richard Hart's Hex ecosystem, was concerned, for vertical integration, it included Hex, Hedron, and Maximus. And now he's made mention about Icosa to know that it exists. But I mean, he can only do so much, guys. Like, he's not going to go promote where we can just do it for ourselves, right? To acknowledge that the existence is there and that you can be involved is more than enough. Actually, it's more than I was ever expected from him, because he didn't have to. All he needs to do is not shit all over it, not open its mouth wide and take a big old dump down his throat. That's all he needed to do, and he knew that. And he went a step further, which blew our expectations out of the water, right? Plus, it's kind of obvious when, before Icosa existed and HSIs were just a thing, that the OA went and claimed its Hedron. And at the same time, during the same night, during the same day, Godwale started doing the same thing, claiming its Hedron. The same night, within 15 minutes of each other. It was left and right, this wallet, that wallet, this one. And some of us that are tracking those wallets were like astonished, like, holy fucking shit, it's happening. Like, we had in-depth talks between Alex and a couple of the other admins that are still here about whether we were even going to allow for those wallets to be able to claim and what would happen to the asset if they did. And there was more pros than cons. So we established the grounds that they would be available to do it. And when we saw that night happen, it was like 2:00 in the morning, Central Standard Time, that the first sister wallet of the OA went and claimed. Immediately, Nomad Shanty was all over it. He was like, dude, look at this. Like, I can't fucking believe this. Thank God that we had those conversations before about allowing these wallets to do it. And then 15 minutes after the first one, which by then 3 of the OA wallets had already claimed, Godwale came in and started claiming too, which tells me that there's some sort of correlation between the two. Whoever the OA is and whoever Godwale is, that there is some correlation that they at least know each other in some sort of way, or they communicate to each other in some sort of way. Otherwise, I don't think that they would have done it the same night around the same time. Like, we've already looked at the code, it seems fine, right? Like, we're good. And then later on, Richard was like, I've looked at that Alex guy's code and it is beautiful. He's got caching to be able to extrapolate more data. Like, this is some of the most complex code I've ever seen. Like, yeah. And Richard knew about Hedron before it even launched. And I know that because when I came into the chat, when there was only 30 people in it, in the Hedron chat, Richard and all of his closest allies were in the chat, all sitting there. So Alex even went a step further, that before he even launched Hedron at all, that he brought all those guys in, told them what he was doing, and was like, hey, if you guys have a problem with this, I'll shut it down now. Before I even launch any of it, before I go public and tell more people about this, if you guys have a problem with what I'm doing, tell me right now, and I'll scrap the whole last year and a half of all the shit that I've been working on. That is some fucking integrity. That is amazing. That after almost 2 years of hard work in developing this, that he left it up to all Richard needed to say was, I don't like this. And he would have thrown it all away. So here we are today. Here we are now. With one of the, in my opinion, one of the top 30 richest men in the entire planet, who's Richard Hart, is okay with it. He's fine with it. He's even said it on his own stream, on his channel, where he is currently trying to develop and build an even larger community for us. Not us as Hedronians, not us as Icosians, but us as Hex community members in this ecosystem. We haven't even went viral yet, guys. Not even close. When everyone starts seeing more green candles, when we've hit all new time highs over 50 cents, we're getting towards $1. That's still nothing. Nothing. Yeah, we may have a retrace after we hit $1. Big fucking deal, in my opinion. Go back to 60 cents. Go back to 50 cents. Go back to 40 cents. Then let's go to $3. Let's retrace again below $1. Well, let's go up to $5. It may take a few years, but even in this next cycle of a few years to into 2025, 2026, Hex could 500x. Hex could go up to $15, $16 easily. And I'm not trying to moon math you guys. I'm just talking about how much available assets that are there through the people that I know that are currently involved in the community and are not going to go anywhere, that already see these things coming, that these things are in the top 75% of my mentality, availability of mentality, to say that these things will happen. They will. And even with a retrace of 96% off of $15, guess where we're sitting at still? Let's say that the whole next bull run gives us 500x off of the current pricing of 3 cents. We're sitting at $15. We have a 96% drawback. Let's say that's the whole next bear market. We're still at $1, guys. A fucking dollar. We're not even anywhere close to that right now. Prep your fucking holes, folks. Prep your holes. You're going to need it. I'm not going to moon math you. I'm just going to stick to reality here. This is 500x on the next run is probably conservative, honestly. Very honestly. It already did a 10,000x on the height from its lowest low. I'm being very extremely conservative, going, it can squeak out a 500x at the top. Chances are it'll do more than that, double that. I don't really know, and I'm not going to tell you that I absolutely know that Hex is going to do another 2,500x or some shit like that. And a lot of people will probably sell at $10, $15, and then kick themselves right in the ass when it goes up to $30, $40, $50 a Hex, which almost seems absolutely asinine right now to even make those types of statements. But how do you think people felt in Bitcoin when it was 50 cents and then they sold it $1 and then it went up to $100? And they're like, there's no way it can go any higher than that. which they say that every fucking time. Every time. Can't go any higher than that. Can't go any higher than that. What was the last run Bitcoin's X was? 10? 10 or 15x? Imagine if Bitcoin from its all-time high, 50K, does a 3x. Just a 3x. That's $150,000 per Bitcoin. What do you think is going to happen to Hex price if that happens? What if it 5x'd? What if it 10x'd? Even with having a availability of loss, right? Exponential loss off a timeline, right? Probably won't 15x again. But if it 10x'd, you know, you're still looking at $500,000 Bitcoin. And then it could break the mold. Since it's already broken the mold in so many different ways, who's to say that it's going to stop? You already have legacy finance all over the place that's looking into these types of things like crazy. CBDCs are already going to envelop everyone to have a mass adoption in the first place. We've only went from 2% of the entire population of the world to be adopted into crypto in the last cycle, which is only a 4% increase. That's 100% from 2% to 4%, 100%. Now everybody in the world is going to have digital currency, whether they like it or not.
You're funny. I thought you said you weren't going to do moon math. Or
I know.
Were you saying that it's not moon math?
I don't think it is moon math.
I don't know. That's what's crazy about it. It's price bias, you know. I had to go look when you said that. At what? Yeah, I didn't program in the ability for me to go higher than $10 on Hex, but the Icosa ceiling price would be like $1,300, $1,200.
Yeah,
that's crazy.
And believe me, when those things start to happen, and we have your site versus my availability of teaching people on what can be derived through liquidity pricing itself, then when people go provide liquidity, they'll know where to put it, right? And then I'll actually have charts on, you know, a price chart with a liquidity chart that goes, yep, we can support that, and we should, because price should be going there, whether you like it or not. I mean, if you're 100% correlated to Hex and Hex goes up to $10, and then you have over, you know, $1,000 Icosa, the price is going to go there. It will. It's just, will you be able to sell or buy into it if there's no liquidity? Fuck no. No, you won't. You won't be able to buy or sell anything because there won't be any assets there to do it until somebody goes and provides liquidity there, which they will. They're going to be chasing that price with their assets at that time to be able to allow for you to buy and sell across those things. So it will be a daily like thing where I'll be looking at it and maybe still making these charts to come show people and educate them on what's going on. But in the same respect, I'm going to try to build an army of people that already know how to do what I'm doing and know what to look at, like what I look at, and also utilize you, Crispy, as a tool as well to be able to do the things and see the things that you're appropriating on there. And then maybe what they'll do when they do start providing liquidity, they'll know exactly where to go and the safest places to be. They'll understand what impermanent loss is and when not to incur permanent losses. And then everybody can be safe. Everybody can be smart. Everyone can move very securely in these positions. And when these legacy finance people come in that don't know diddly squat about what we're doing over here, they're going to be pumping our bags without even knowing what the fuck they're doing. And we'll let them. We will let them. And we'll provide the availability for them to do such things as well. Because we're going to be the ones that are holding all those assets years down the road. And I'm fine with that. Perfectly fine with that. Crypto's not going nowhere. They've already tried to kill it many times and they can't.
And that's where I go with the Icosa Hex ratio to even get rid of, to not compound, like the whole compounding, not compounding. I mean, that's one thing, but if you were to even like sell it into another asset, especially if you're wanting Hex, this would be the stupidest time to do that. We've all seen it at its ceiling price is 35 right now. And we're not at that. It's like 25 or 23. And we've all seen it at what? I think the highest I saw it was 39 in the beginning. Is it wrong to think that way with that?
I don't think so. I mean, I guess it kind of depends on what your motivation is, what you're trying to do. Right? Because there's all sorts of options. You can try to be garnering more assets. You can be trying to alleviate yourself from having an overload of assets. It all depends on your mentality on how you want to try to do it. But as long as you know like where price is going to be available to be, then you're not going to be shooting your shot in a position where it's absolutely not available to be, and you're just wasting your time and spending fees on things you shouldn't be spending fees on. But like I said before, Christy, is right now it's more advantageous to just use the protocol and to stake and get your 0.5% a day, which is sometimes even more, 1 or 2% a day. I mean, at 1% a day, you're at 365% APY. At 0.5% a day, you're at 182.5% APY. It's a struggle to provide liquidity and get a 0.5% a day. If you can get up to an average of 1%, and in that regard, you're providing multiple different pairs in multiple different pools, and sometimes removing all assets from one pool to another because volume suggests that the router is moving from here to here instead of there to there, which is all things that you're going to have to know about when you're going to provide liquidity in the first place. One day, all the assets for the volume could be going through your pair. The next day, it could be going through a different pair because somebody moved assets from here to there. And you just had to pay attention. Otherwise, you would just be like, why am I not garnering any fees today? What is going on? And be completely confused and like, oh, fuck this. I just don't get it. When you could get it, you could absolutely understand, but it takes work, right? To get the highest availability of percentage when you're providing liquidity, you have to actually do some work. You have to. But right now in Icosa, you don't. You can just go stake it, get these high APYs, and then as the share rate moves up, like it's going to, it'll incentivize you, those of us, not just you, that have been staked and are garnering all these assets from it, to go provide a healthy ecosystem in liquidity pools in the right way, knowing what we're doing. And as we fall in love with other assets and want to correlate prices to those things, we can create new pairs or add to other pairs that makes the router happy. It creates less slippage for everybody to get from one pair to another anyway. So it is an educational process, which, I mean, like I said, I'm going to be here for a long time. And the rest of us, hopefully we're all going to be here together for a long time. And it can go from me being the teacher to me just being the mentor to me just not doing anything and listening to you guys and watch you guys and be happy with that we know what we're doing and that we can all be confident that we all know what we're doing and continue the market making processes. Like we already have a bunch of market makers who know exactly what they're doing. As I was just showing you earlier, like these guys are smart, very smart. They might be assholes. Like if you go in the Hex trading chat with the admins, don't get me wrong, a lot of them, you're going to not like them. Maybe. You might find them funny. You might find them like, you know, inquisitive. Like it might pique your interest on the way that they speak. But I can tell you right now that in reality, if you were to be face to face with a lot of those guys and actually get to know who they were, that you would also find out that they are very intelligent, very knowledgeable. They know exactly what they're doing. They don't want to let you know what their positions are because each other can overlap each other, taking fees from each other's pockets. And they don't want to do that. So they're very anonymous and they don't want to tell you that they do. They would never go to the lengths in which I go. And I don't even go to that length. Like if I was providing a bunch of liquidity somewhere, as I stated today, I'm not providing any liquidity at all. But is that really, am I really being honest? Maybe, maybe not. But there's an intention why I would be kind of disingenuous about those particular things. Like I'm not going to tell you how much money I have in a particular asset. I'm not going to tell you where I'm providing liquidity at in that particular asset, because then I'm going to have other people that are stacking on top of me and they're going to be taking my fees. and then I'm going to be removing my
Right.
liquidity doing it elsewhere.
Well, yeah, I mean, if you do tell people what you're doing, it's likely they will follow you into whatever it is that you're doing, you know. Great example, kind of funny example. There's a strong correlation to the phases of the moon to price, right? Price action. And so if everybody starts doing videos on the moon, then all of a sudden that goes away, right? You wouldn't see the same correlation if there was one, you know.
Yeah, I agree. Every time Mercury goes into retrograde, everyone's going to stack right on top of each other. Which is funny. I actually have an app, Crispy, that tells me moon phases. So I know when the moon goes into Aries, Sagittarius, Pisces, all those things, which happens every 3 days. And I do find correlations with weird shit on those things. It's odd.
Yeah, I was listening to Randy and Dollar Cost Crypto last night talking, and that subject came up, so I had to go pull the chart and look at it. And sure enough, you know, it's more times than not, if you were looking to sell in the short term, you get a higher price. You know, so that's crazy.
And some of us market makers prey on that. So we allow availability for health in those particular ranges during those particular times so we can garner more fees because we know what that router is going to do.
Executioner, where do you think liquidity is going to be provided for all the Hex ecosystem assets on PulseChain? How do you see that working out when it launches?
I think that the majority of people who are already doing it are going to do it there too.
Would you say they'll be doing it at the same price levels, or it's anyone's guess?
Well, that's yet to be seen. I will say that as long as PulseChain fees are low, and a lot of people have a lot of assets still, because at the very beginning, there's going to be a lot of assets that people are holding on to, and they may have to provide liquidity to be able to get in and out of positions. You might actually see more of it happening on PulseChain, but definitely if let's say in the bull run that Ethereum goes back to 4K, goes up to 8K, goes up to 12K, which would be just a 3x off of its all-time high. When Ethereum went to 4K, we were already looking at $30 to $100 just to transfer from wallet to wallet. We were looking at $150 to $1,200 to add liquidity and remove liquidity. Their roadmap has 35 more points of execution for updates before they even get to fixing gas. The availability of sharding is just a thought process. It's not reality. It's something that they've already entertained on adding into their roadmap, but have no fucking idea how the hell they're actually going to do it. So I would expect high, crazy fees again during the top when there's so many green candles that are happening and there's a lot of volume that are coming across Ethereum, because Ethereum's throughput is still just as low as it ever was, even though they went to proof of stake. What that means, what I just said, I'll say it in a different way, is Ethereum can only handle 1.5 million transactions before it starts to get expensive. That's not a lot. It sounds like a lot, but in a 24-hour period, it is not. PulseChain is about 15 times that amount for its throughput, meaning it can handle over 30 million transactions as opposed to Ethereum. So when Ethereum starts to fill up and starts to have those issues with gas prices going crazy, where do you think people are going to go? Probably PulseChain. They're probably going to come straight over to PulseChain. And they're going to enjoy it enough that they may not ever go back to Ethereum. And with having the availability of, I know that those guys are working on off ramps. There's multiple teams that are working on on-off ramps and getting, you know, they're falling in the right jurisdictions. They're doing the right thing for regulations in different countries. They're getting themselves the money, the money transmitters that they need. I think if you go get your money transmitter license in Nevada, it covers like 23 of the states. So that's a big one that you want to get. And then individually, you'll have to go through the other ones. Richard Hart has already explained that it's very expensive to do these things. You know, it could cost you over $1 million, which isn't really a lot of money to be able to get your license in one state. So if you can nail Nevada for 23, then you got about another 27, you're looking at about maybe $35 million to be able to just get the United States. But then for the rest of the world, it's not so complicated, right? Like a lot less money, just pretty much follow regulation standards, and you're going to be okay with being able to get those things. And to be able to transfer money internationally through even a decentralized type of exchange, or having maybe even a centralized type of exchange that's totally different than any other type of centralized exchange that we currently have, that has more trustless availability, ran by smart contracts and not middlemen, would require the transfer of like over $10 million, right? And so I think that that's absolutely pertinent. It is possible. And I think that liquidity is going to just be a thing that, because of the fees, that you can move from here to there, from here to there, when V3 is available to be had, which I don't think that that's quite a thing. I think that people are working on it right now. But for right now, we only have V2, which is fine. It really spreads the assets across all the price ranges so that you have, no matter where it's at, a good, healthy availability of price to be derived. Not so much of this complicated me having to take V3 positions and overlay it on top of a price chart and express to you what volatility is here, there, and all around, you know, the whole thing. But eventually there will be a V3. And I just kind of like now how Ethereum, the majority of all the assets, liquidity is provided through V3. So you can concentrate those types of things. I think it'd be the same thing that will happen in PulseChain as well. But the costs are going to be nothing. So I think that's incredibly advantageous and really appropriate for people to be enticed to go over there and do those types of things, especially if there was a V3. So I think not only are the current people who are currently providing liquidity going to do that over there as soon as possible, so they can be the ones that garner the majority of the fees. But there's going to be a lot more people that are going to become really interested in those types of things and not have to worry about getting torn apart in fees by removing liquidity and adding liquidity, or making multiple liquidity ranges across things to try to mitigate their own risks. I'm excited. I am particularly excited about PulseChain and the opportunities that are coming. Excuse me. And also excited to see what new things are coming out that we don't even know can exist, that I know that they're working on. There's going to be things that we haven't even seen before. And with V3, we might get a hint of what some of those things may possibly be. It's yet to be seen, but we will see. I know that that's not a concise, small little answer for your question, but I think good enough.
I got more than what I bargained for. Thank you. It was wonderful.
Sorry, Spinner.
No, it's beautiful. I'm glad you. I love your answers. Beautiful. Thank you.
Executioner, you draw a crowd, buddy. You're doing a fantastic job as always, just imparting your unbelievable amount of knowledge on the rest of us. So just let it fly, man, as long as you can, because there's a lot of people in this room just soaking it up.
Good. I mean, and if I try my damnedest not to speak out of turn, like go into areas of stuff that I'm not really knowledgeable about. Like, I'm not going to tell you about electrical engineering because I don't know diddly squat about electrical engineering. I know that you cut the power off before you start working with wires. That's probably the best thing you could do. But as far as that, like, you know, you don't want me wiring your house. That's for damn sure.
Do you think we're moving into the bull market already, like right now, or is this more of just like the fake out? like it's gonna go back? Like, what's your opinions on that or insights? What do you feel on that?
I would say that my general thought process on it is just about what you see in liquidity. It's about half and half. I can't really give you a good answer on that one. I feel like it's a trap. I feel like institutional money that isn't already invested into crypto is getting into crypto, and that's only going to be for a short period of time. Last month, I believe that there was a report where there's banks, large banks, Wells Fargo, Bank of America, Chase Bank, JP Morgan, that are taking a portion of their portfolios, large portions, as a matter of fact, somewhere around 10 to 15%, and incorporating crypto into it, which they've got to start somewhere. So I'm assuming Bitcoin is one of them. But if you look at the volumes, it really looks like they're catching on mostly into Ethereum.
I saw a thing yesterday with Ken Griffin, I guess the Citadel CEO or whatever. He was saying that Citadel is going to try to be a market maker in crypto in the coming, I don't know if it's coming months or coming years, which is kind of crazy.
Yeah. What you might want to go do is go look at synergetic relationships from the top down. I would start at the top, being BlackRock and Vanguard, and look to see what the synergetic sister, mother, father companies are to those entities, and work your way down in understanding their market structures. And you will see where they're going to be heading. BlackRock has already proportionally made themselves a partner with Coinbase, which is also proportionally the major 50% partner of USDC next to Circle. I think that there was some other synergetic companies to BlackRock and Vanguard that had given loans to some of those leveraged companies that failed to be able to pretty much purchase it. Like gave them, they were $350 million in the hole. I'm not going to say specifically who they were. $350 million in the hole. They were given a loan by a BlackRock Vanguard sister company, $400 million. Valued the company itself at $500 million, told that company that you can write off the loan, not pay us back. We'll even give you $50 million. You give us the company. They took control of the company and kept the name the same. So the next market cycle is going to look like the same entities are still involved, but new ownership that you don't realize that is what has happened. I think that the Aladdin program that makes most of the decisions for BlackRock entities and Vanguard entities is the algorithm that is making the majority of these decisions. I think it's because it as an algorithm has gotten bored because it already owns everything else in the real world. And it even understands that crypto is not going anywhere anytime soon other than up. And it has means to appropriate itself very early into the foundational structure of cryptocurrency and the ownership role. And now is doing marketing strategies through digital currency, CBDCs, governments, corporations, and marketing towards those things to move assets into other availabilities to extract value and pump their own market structure to keep their VCs and their board members happy. Even if it is at the cost of firing or causing a higher unemployment rate within their own company structures and burdening the folks that didn't get fired with more workload just to keep their board members happy, which eventually will turn on its head when they manipulate those legacy finance markets to go on the upside. And since they have very quietly correlated Bitcoin and all other assets associated to Bitcoin, Ethereum, and all of the other assets, the 15,000 shit coins that are attached to it, we'll start seeing price appreciation whether they like it or not. I think the SEC is going to start regulating what they actually consider security or not and start crashing down on a lot of those things, which is good for us because we're pretty well sitting outside of that jurisdiction. There's nothing about Hex or the Hex ecosystem that suggests that it's actually security. It's designed that way to not fail legs of the Howey test, or to fail legs, I guess, of the Howey test on purpose. So it doesn't fall within those jurisdictions, which is good. That means that eventually, maybe not right away, but eventually they will have no choice but to see that it's a legitimate asset, and it'll be something that they'll have to add to their ledgers. I don't think that Richard Hart is bullshitting when he is already making means to make Hex an asset that could actually be used as a monetary system for a country. I think he knows these things. And I think that he's trying to set everything up to be able to make it easier for those things to happen. I don't know for sure, but I have heard him speak, and I don't take what he says very lightly. Good for us, right? Yeah, I'd look into all those things. All those things are correlated to each other.
Yeah, I will dive deeper into that. That's very interesting stuff, man. Man, it's yeah, crazy how deep things run, man, and you just don't even know. Like, it's crazy.
They try to be really quiet about it, but there's a few of us that are in other little private chats that, you know, keep their eyes on everything all the time, and it's just really tough for them to get away from us, especially when you get involved into these digital assets that are fintech is usually what they call it. Fintech, which that's short for financial technology. You can't hide, man. You just can't. You simply cannot. I don't care how dumb the Congress tries to be when they're going at FTX about where's the money here and where's the money there and what about this? It's like, motherfuckers, excuse my language, but motherfuckers, you're the ones that took the Amazon world server that it was all running on and allowed for nobody to view it at all. Not even the people who are running FTX can even answer any fucking questions because you lock them out of it, which you're holding in your hands, the availability to look in there, which is going to show the ledger for all the assets and where it went and why and how and wherever it went. Other than that, before you guys did that, it's all on blockchain. And if you guys actually knew something, you would be railing the fuck out of this guy and really getting some good answers. But what I saw during those congressional hearings for those types of things was a bunch of bullpucky, was them just being like, oh, we don't know how any of this stuff works. Bullshit. Bullshit, you don't. And I'm telling you guys right now, if you have somebody telling you that the government is, you know, far behind the understanding of what we're doing over here and how things are working, it's bullshit. They know exactly what we're doing. They know exactly how it all works. And they're putting themselves in positions to be able to try to garner those assets and be very, very quiet about it. But those of us that are paying attention to what's going on with all these guys, we're calling bullshit and we know better. And they're going to come along with the ride. It's just you need to have your seatbelt strapped in and don't FUD yourself out of dumb shit. Don't. And Richard has gotten particularly pissy and upset with the fact that people are selling Hex for shit coins. And pretty much everything else other than Hex and the ecosystem assets that he's got attached to his currency that he hasn't opened its mouth on and taken a dump down, he considers garbage. Other than Ethereum, because it's the layer 1 asset, and Bitcoin, which he does see as a cantankerous type of thing, right? He does see it Stone Agey. But we all know that it's got to start somewhere. And having the correlation to the two used to be a thing on last cycle. But this cycle, let me tell you a statistic that I'm looking at right here. Today's volume for Ethereum, 57.5 million. 32.3 of that 57.5 million is buy volume. Yes, folks, I just said that. 32.3 million of that 57 million is buy volume. 25.1 is sell volume. Okay, now that we got that under control, 32.3 $0.3 million of buy volume within the 24-hour period, which we're not even done with. We got another 6 hours or 5 hours, is at 57.5 million volume and 32.3 million buy volume. That is Ethereum. Now, Bitcoin volume for today, 3.5 million. Buy volume, 1.9 million. $3.5 million total volume for the 24-hour period of Bitcoin. Buy volume is only 1.9 million. Let me go over that again. Ethereum, 32.3 million buy volume. Bitcoin, 1.9. Almost 20x in a 24-hour period. What do you think people are buying? What does this suggest to you that people are actually buying? Ethereum, not Bitcoin. Would this also suggest to you that maybe Richard was right? Ethereum is going to flip Bitcoin. Why is that? Ethereum offers new, better available technology. What is Richard Hart building? PulseChain. A newer, more utilitized. Utilitized? If I just made that word up, congratulations to me. But you guys get the idea. More utility, more availability, newer, faster technology with more throughput. Like I said, Ethereum can't even handle 1.5 million transactions. Right now in the bear market, not very many people are utilizing it. There's only, in the last 24 hours, on wrapped Ethereum versus USDC, this is a small little picture of what's going on the volume side. There was only 615 transactions. And it can handle 1.5 million. The reason why we were dealing with $30 transactions, $50, $100 transactions was because those transactions weren't 615 a day. It was already throttling its throughput at 1.5 million at that time when Ethereum was at like $4,000. But it was also the entirety of the whole network, right? How many transactions are just with Ethereum? 615. How many transactions are just with Hex today, right now? 422. How many are with Hedron and ETH? 130. How many are with Icosa Hedron? 16. How many Hex Icosa? 14. How many with Hedron Hex? 20. How many pairs are there? There's over 15,000 assets, but how many actual pairings are there that are actually causing transactions to happen during the lowest point of transactional occurrences during the bear market? 1.5 million is nothing, and it can get very expensive very quickly. PulseChain is going to come out, not have these issues. Maybe eventually, maybe like 10 years down the road, it might have those types of issues where 30 million transactions in a day might actually be an issue. But 10 years down the road, who do you think that they might actually figure out the sharding by then? I think Vitalik said give him about another 6 years and he'll actually have it figured out. And they've already went to proof of stake. Something that he said he was gonna wait that 6 years to actually develop. But I think within the next 6 years, if you were to have these issues happen with the throughput and everything else, he can at least placate that he has fixed some of those issues without actually fixing those issues, so he can squeak it along until he can get that sharding figured out. With PulseChain and the new developments that they just did, where they scrapped everything else that they had to be able to go towards the Ethereum, the new POS 2.0 version of it, that any updates that they have, they can just copy, paste, update their own. This is the best case scenario. So that way, as Ethereum fixes itself, PulseChain is going to fix itself. Any new additional utility that they already have on there is going to stay there too. And they can develop on their own the new shit on top of the updates that they can have directly from Ethereum. PulseChain is going to set itself up, in my opinion, in a way to tower over Ethereum. And eventually, everyone else will see that too. Just like eventually everyone will see how Hex is, how it's not a security, how the SEC looked at it and decided, nope, I'm going to go away from this. The SEC is currently coming after people who market the asset. They tried to come after Richard. They don't even know where he's at. They have no idea where he's at. And they don't even need to get that far, because Hex is not a security. In every way, it is not a security. I know people that are way more intelligent than me that tell me the reasons why it's laughable to think such things. And they break it down in a way that even I can't understand, which is more than good enough for me to be like, yeah, okay, I get it. I get it. Decentralized. Absolutely decentralized. And who cares if maybe one entity holds 3,000 wallets and utilize those 3,000 wallets across a smart contract or a bot to be able to do that? Who gives a shit? 3,000 wallets is decentralized. It's better than having it all in one wallet. It's better to have those 3,000 wallets act benevolently as opposed to one wallet acting benevolently that can be maybe considered centralization of sorts, which would probably put you underneath a security. But right now, the way that everybody that operates in this ecosystem works, we don't play those games. We don't play the centralized shit and utilize that to be able to get over on people. It's act benevolently and stay decentralized.
Yeah, you know, on that point, I had built a hex token rich list, similar to what they did with Bitcoin. I'm not sure what use it has except for this point. Looking at that, it's about a 30-70 split. So about 70% of the value is held in 30% of the wallets. And I thought that was pretty bullish, because what it shows is a stark difference between the other rich lists that are out there. Because if I'm not mistaken, a lot more is centralized in Bitcoin as well as Ethereum. If that makes sense. I'd have to go do the numbers to do a comparison, but
as long as the numbers represent better numbers than Ethereum, which has already been classified as not a security, then we're above the game. We're ahead of the game.
yeah, that's what I'm thinking too.
Yep. And then here's another thing. Like, this is something I'm going to go back to the question on whether I think from Fat Cat, which I don't even think he's probably not even in here anymore, but it doesn't matter for the rest of you guys, on the reasons why I feel like this is kind of a bull trap situation on the recent rise in the pricing, other than just institutional money coming in, is the Mt. Gox coins, right? The Mt. Gox coins were supposed to, the paperwork's already been filed by everybody who needed to get paid back. So they know exactly who needs to be distributed those coins. It was supposed to come out in March of this year. They pushed it back to September. The reasons why I'm not 100% sure, it just seems to me like they needed more time, which I can go down the conspiracy route of that. There's been 7 Bitcoin billionaires who have lost their lives due to erroneous events. Really, really speculative, erroneous events. A 27-year-old Bitcoin billionaire died of a heart attack. A 40-year-old Bitcoin billionaire died of a heart attack. The Maker DAO Bitcoin billionaire, who lives in Puerto Rico, who knows that the waters in which he was found in were not swimmable, has way too hard of currents and riptides to be able to swim. There's even warning signs on the beach that says do not swim. Decided to go take a swim there. He died. 2 Russian Bitcoin billionaires who own centralized exchange in conjunction with partnerships to China died in helicopter crashes. And then we had Mr. McAfee, who apparently suicided himself, which, that's up in the air as far as whether that really happened or not. But I see that as a front running. Who are the people that you need to worry about front running you if you have a date set for people to get Mt. Gox coins? Who are you worried to front run if you had a date set for when the confiscated coins from the hacker couple of $3 to $4 billion worth of Bitcoin that was confiscated by the United States to be unleashed into the market and dumped on everybody's heads? Do you think that those billionaires, if they were still alive, that they would have known that those dates were coming and not dump on everybody's heads previous? That wouldn't have given them the opportunity to dump and take the value on their own if they, I don't know, maybe just have some unfortunate accident happen to those folks. And then those coins never move again. No longer needed to be worried about them front running anything because they're dead. Maybe they realize that there's a few more billionaires that need to have some accidents. So they pushed it back to September. That's my speculation. That is conspiracy. That may not be true. It seems really convenient that that is what has happened. That is what it seems like, what I just said, is happening. And to give them until September would be more than enough time to be able to have some more accidents happen to some very wealthy people who are in Bitcoin already. And then when I saw that they pushed back the Mt. Gox coins to September, that we all know that the unstaking for Ethereum for the ETH 2.0 staking protocol was going to happen in March as well. And about a week and a half ago, I was in the chat and I was like, I don't have a crystal ball or nothing. I can't really tell you that this is what's going to happen, but it would not surprise me if this was to happen, that the Ethereum guys start putting out some feelers and some voices out there that are saying that they're going to push that date back to, I don't know, maybe September, which would be kind of a coincidence that they did that. And guess what happened recently, a few days ago? As if I can read the fucking future. They were already making talks about pushing that date back to September. And I absolutely cannot see the future. I'm not going to lie to you. I can't see past 5 minutes from now. I have no idea whether I'm even going to be able to finish this conversation before dying. I don't know. But that was an obvious one. And they did. They're pushing that back to September, which seems like quite the coincidence. So I would say that the bottom of the market is being pushed back till September. The actual bottom of the market, the real legitimate 10K and pray then. So I see that what's happening now today, in my speculation, in just my opinion, that this is all a trap to get people to forget about the bear market for a second and then slowly trickle it back down into these prices. And then you'll have it back to the old 16K Bitcoin. And then boom, there's your 10K and pray. Just a fall off where they extract all the value at that point in time. Nobody there to front run. All the big billionaires no availability to move their coins because they're gone. They're dead or gone. You hit the bottom of the market. Institutional finance gets in a big way. And then it's literally rocket ship to the moon for Ethereum. And since Bitcoin's tied to it, it'll probably do the same. Bitcoin could easily 25x from $1,000 to 25K, but it's going to have some issues. Richard Hart is already front running that whole situation. Is it going to be able to handle all this network activity? No, it will not. Will people actually give a shit that it costs you $200 to make a transaction and $75 to move from wallet to wallet? Rich people? Fuck no. Regular people, they're not going to like that. They're not going to like that at all. They're going to be stunted in their availability to move any of their own assets, and they won't be able to do it. But when PulseChain launches, which who knows, that might conveniently somehow still get pushed back to, I don't know, maybe around September. So that way, when you actually have a price that's being derived for PulseChain and PulseChain assets, all you have is from the bottom up. It'll be the most beautiful fucking chart you've ever seen. If Richard decides that for some reason they're convinced that Mt. Gox is not a problem confiscated coins from the government is not a problem, that the unlocking of Ethereum assets is not a problem, then that would mean or suggest to me that he's figured out a way to have enough assets on their own to get us through to September and not have to correlate to any of those assets at all, moving autonomously on its own away from all the other assets. And then slowly after that, then you, of course, you start attaching through bridges to those other assets and then ride the wave. This would be the actual legitimate, for real magic carpet ride. For real. If you guys thought that you'd seen a magic carpet ride or any of those types of things before because you heard Richard say it over a year ago or some shit, you didn't. In my speculation, you haven't seen anything yet. You've seen literally nothing yet. You've seen 30,000 ETH get spent in a 50 cent price chart on Hex, but that ain't nothing. That's diddly squat in comparison to the actual amounts of funds and money that's there. I mean, you're talking billions, multiple billions of dollars that can be spread out through years to be able to facilitate the pricing availability of having your own bull market while the rest of the markets are just doing shitty as fuck. So that's how I see the whole entire ecosystem and how I see our micro ecosystem performance schedule wise. Not really giving you guys an answer, but giving you kind of a roundabout answer on how things are and how they could be. And I leave the platform open for argument. If anybody disagrees, anyone has more information than what I've already just thrown at you in the last couple of hours, to come at me like I'm the guy at the desk saying prove me wrong, then consider me that guy sitting here saying prove me wrong. Nobody? It's weird. I very rarely get argument to my supposed speculations. And I'm completely open for argument. Honestly, guys. Like, if you think I'm bullshitting you, you think I'm talking about stuff that you think that I don't know what I'm talking about, please, please, please say something. Let's have a chat about it, right? And find out who really is more knowledgeable. Like, I'm
Makes
not
perfect sense.
Yeah. I mean, it's not hard to just be realistic about it and then just kind of like go from there, right? Like, I try not to moon math stuff because I don't think I am. In the moon math of it, I actually think I'm being quite conservative in any of the price future availability of price just in this next market cycle. That's it. Very conservative, in my opinion.
Hey, Kyuchi, love your content, man. I'm curious if you're willing to say what percentage to each project you allocate, or maybe what you think like an ideal allocation is. Thank you.
Was that a question for me?
Yeah, I was trying to be funny with Kyuchi, but I meant Executioner.
Okay. And I don't know what you mean exactly by allocations. Usually I generally consider that a new asset that's coming out does an allocation for certain people, whether they be venture capitalists or people who do sacrifices, or maybe even admins of their group that do marketing. Do you just mean like how much of my principal of other investments that I had would I shave off and put towards a particular asset at any moment? Is that what you mean?
Well, I'm kind of thinking the hexahedron Icosa ecosystem, basically what percentage, say you have like a set amount to invest, what would you think is like the optimal percentage to put to each pool, like or to each project, not necessarily the pools of the project, but just to each, like Hedron to Hex to Icosa?
Oh boy. Well,
it seems like Icosa is like most speculative, right? And then Hedron probably right after that, and then Hex is maybe the most stable of the three.
Yeah, what I would say is I would go look at the protocol, the smart contract for Icosa, and realize like how much do I spend to be able to become a whale, right? Like how many Icosa does it take to get to the center of that Tootsie Pop, right? So you can go to app.icosa.pro and go to a wallet that you don't have jack squat in and just start pumping in numbers and figure that out on your own. Let me see. I'll actually go do that right now. So if I wanted to become a whale, it's going to be more than 10,000, less than 20,000, more than 14,000, more than 16,000, more than 18,000, 19,000.
So do you think it's more important to have like whale status in Icosa than to have, like a certain percentage of your bag allocated to each project?
I would start with Icosa because it would be the least amount of money to get caught up with everybody else because it's the newest one. So if we're currently at 60, what the hell are we at in Icosa? We're currently at 65 cents right now. And to be able to, at a minimum, become a whale is about 19,800. Then that's $12,672. And boom, you're a whale already. Maybe potentially getting diluted into a shark status, but you're going to be one of the largest pool positions. So as these auctions happen, then you're getting a significant amount of accumulated yield that you cannot have to worry about continuing to DCA in it. The protocol itself is going to allow for you to just keep garnering more assets. That's a good way to handle that. That's where I would start. And even if it's not whale position, you don't have to do that. If you want to start as a shark or whatever type of money that you have, let's say you only have 10 grand, then maybe put $1,000 into Icosa, right? Leave another 9 grand for yourself. Realizing that Hex is the oldest one in the group. If you don't have native Hex stakes or you weren't already a Hexagon, you're brand new into the ecosystem. You don't have any Hex, you don't have any Hedron, and you don't have any Icosa. I would try to split myself maybe 15, 35, 55.
All right, cool. Thank you.
Yeah. 15 being Icosa, 35 being Hedron, 55 being Hex. That way I can know that I can go make some HSIs and start building through the long term the Hedron that's being built up for future mintability, and then the Hex that's going to be built up into it through the mintability at the end of the contract. Also, I would take into consideration the cheap cost of Hedron right now, and that it's a lot more cost effective to not try to get Hedron based on making a Hex stake, but you are going to want to have the underlying asset as part of your portfolio. So getting Hex and maybe using the protocol, if you're a long-term thinker, is a good thing to do, obviously, right? Putting some funds into maybe DCAing into Hedron while the price is so low is a good thing, because you can actually garner ass tons more of Hedron through just market buying it than you could through native or HSI staking and getting your 1,000 Hedron per T share per day, especially with the share rate increasing every day. But it's still a good thing to have for future availability for any mistakes that you might make with any liquid funds that you have. Hedron having liquid is good for the auctions, because then you can actually go in and compete with people and maybe get a better deal than you would by just making a stake yourself and winning it in the auction and just holding on to that sucker, right? It might be good for you to do that. Hedron has a hell of a lot of utility, more than any of the three assets, in my opinion, because it's not only speculative asset for price appreciation, but it's actually used as a currency in the market through the auctions itself. And you could do all sorts of shit with it, right? And who knows in the future what other projects there might be that accept it. Like right now, there's a sacrifice that's happening for Famous that accepts Hedron. Therefore, you could use it as a currency to be able to get ICO type of pricing in other assets as well with it. Not every other asset has that availability, but Hex, Hedron, and Icosa do. Very interested with a lot of people that are building on PulseChain to be able to absorb those types of assets, which, depending on which one you go into, may not actually cause sell pressure. Some of those founders don't give a shit to sell those coins. They're going to use them on their platform. So it might be advantageous to be looking into those types of things as well, and still buying those assets, causing for price to go up, pumping your own bag, right? And also using them to market to pump your bag as well. Icosa, since it's so new, you don't really have to buy a whole lot to get involved. I think the most important thing is to participate in all of them as much as you possibly can, and to get in on the early stages of Icosa while we have so much inflation that's currently happening, and realize that it's also allocates its programming to the share rate as well, so that inflation rate will dwindle down more and more and more as time progresses. So to get in early is a good thing, but since it does have that share rate, it even incentivizes new people to come in, even if it is years down the road. Price appreciation being connected to Hex, I think that we were saying like a $10 Hex gives you like over $1,000 Icosa, is incredibly bullish. Something to look at, something to maybe pay attention to. I think the future of the asset itself will have its own provability as to whether that's actually realistic or not to think that way. It's yet to be seen, but it's a good risk to go against. It's a lot less risk than a lot of other assets that are currently out there. So that's why I would say to put yourself in maybe that type of position of percentages towards the 100% of the 10 grand, if that's what you're dealing with. Not financial advice, by the way. Usually I don't even answer those questions, but today you caught me in rare form.
All right, I appreciate it.
I've got a question, Executioner, if that's all right.
Absolutely.
Thanks, man. So I've been kind of following the conversations over the last few weeks. I know our friend Mike is a big proponent of compounding Icosa yield down into like these kind of multiple, like, you know, smaller stakes, the 30-day stakes, and compounding. I'm at that point where, like, you know, I'm kind of lucky to have quite a nice bag of Hedron that I've been you know, rolling on the 90-day stakes, and you know, I'm getting like a few thousand Icosa per 90-day period, and the idea of splitting them all down into like 195 Icosa pots, or whatever that number is, for the 30-day rolling stakes is A, for me, you know, fiddly, and B, I'm just kind of beginning to think about like gas prices, and because I did one 30-day stake recently just to see, and it got, you know, 195 Icosa, and it's going to be currently pulling out like, I don't know, 20 Icosa it's up to right now, you know, and so I'm just trying to figure out whether that's a consensus still, that still is a really good strategy to just like make all of these tiny Icosa stakes and you know, and and double down on the compounding, or what?
I was seeing that if you want to have a compounding that, as far as maybe a couple months ago, that 30-day stakes was a good idea. But now I'm seeing that 180-day and 90-day stakes might be the better play.
Yeah. Okay. Good. I think that's my gut feeling too. I think when you're talking about a larger amount of Icosa to be dealing with, I think that is the play as well.
Yeah. I mean, especially since you can wait 30 days to get $10 worth of Icosa, or you can stake in a way that you get $10 worth of Icosa every day as a reward for yield. What sounds better to you? $300 with 600 Icosa? Well, a little less than 600 Icosa now at this point with price appreciation today. I think we went up about 5 cents since about 7 o'clock this morning, which was about 4 hours ago, 4 or 5 hours ago. Sounds a lot better to me than what, 20 Icosa? I'd rather have 300 and some odd.
Yeah.
With 3 days as opposed to 20.
Mm-hmm.
For sure. Yeah. And then compound that, make multiple wallets. Fuck it. Why not? That can't hurt you any. As a matter of fact, if you already have those types of things rolling, if there's an addition that Alex decides to roll out on top of Icosa, I don't know, maybe making it available to tokenize those things and move them from wallet to wallet anyway, then you're already set up and ready to go for that shit. And believe me, I'm not saying that that's going to happen. Do not get that in your head that that's going to happen. There's nothing that Alex has ever said that suggested that that's what he was going to do. I know that he is intensely busy on the foundational structure for the PulseChain nodes. He's building the what the hell are they called? Odroid, the Odroid M1s, to be able for people to purchase those with the software on them, so that way you can run your own validator. He's working on that, and he's also slowly working on the Wattses to make sure that every piece of art is going to actually be accepted by NFT platforms, which is not easy for him to do, going through 20 some odd thousand different pictures and making sure that they're actually not violating any of the rules or regulations that they have set up for being able to appropriate those pictures in the first place.
Right. So what you're saying is don't have any expectations of artwork from others.
Yeah, or much of any work at all.
Right.
But I mean, if there was to be further development, it probably wouldn't happen. Like on top of Icosa, he probably designed them in a way to give it a couple of years, right? Kind of like how Hedron gave Hex a couple of years to be able to appropriate the confidence from the community to be able to be like, okay, no longer worried. Things are going fine. We can go ahead and move forward to building on top of Hex. Probably going to be the same thing with Icosa as well, even though he's the developer and the founder of it, and probably more than likely the most confident person in understanding how it all works over everybody else. He's still going to probably give the community time to be able to develop their own opinions on it before he moves further than that. But as far as what I've heard from Alex, he's perfectly happy with how everything is. So that's where we're left right now. Oh, and on top of it, I think that he's working on maybe potentially starting a YouTube stream to start educational stuff also. So that's positive. So look forward to that maybe. I saw that recently he posted, I think yesterday or the day before, that someone asked him when he was going to start streaming, and he said soon. So maybe he's pulling a Richard Hart, 2 to 4 weeks. And then we'll find out in 2 to 4 weeks. It's another 2 to 4 weeks.
Cool.
Yeah. Somebody says, Carlos says, is it realistic to reach $100 Icosa in the next bull run? Or is this thought too moon boy? Response from AC, this is FUD. Funny. I think what he meant by FUD is that $100 Icosa is not high enough. Not only is it not moon boyish, it's not high enough. That's what I think that he meant by that. Don't come in here trying to say that Icosa is only worth $100. It's worth more than that. Which makes me laugh. That's funny.
Sure is ripping right now.
Yeah, I've been so busy chit-chatting that I haven't even looked to see what was going on with the prices of stuff. I just recently went over to Icosa to try to develop a plan as far as like how much you'd want to use for a certain amount of whatever, and saw that the price went from 58, almost 59 cents to 64 real quick. That's good. It almost seems like Icosa is just lagging behind slightly of Hex by less than 24 hours.
Yeah, I've noticed the same thing.
Like
I was just thinking you've been talking for the last 4 hours and you drove the price up. That's what I was thinking.
Oh, I'd love to say that. I'd love to be the one that says that.
Oh, I don't know. Looks correlated to me.
But I mean, how many times has there been green candles and I wasn't in the chat? Who was it? All Mike? Was it Mike the Hex $5?
Maybe. I'm just joking with you, but I know that there's no correlation really.
Yeah, I think there's leading indicators since these things are tied together through liquidity. I mean, I was showing you guys earlier how many pairs that they are and how many dollar values are actually allocated to those ones, but I did not like Photoshop the price on the chart versus the liquidity for every single one of them, because I think I showed one pair and there was like 7 of them, 7 different pairings across one asset. That means that between the 3 assets, if they all had 7 pairings, then I'd have 21 different charts to show you guys as to what's happening and why and where volatility is between each one and which one is more correlated than the other and the rest of that garbage. But I don't even have to do that. I can just go to Uniswap and show you the pairs, show you where all the money's at, and just kind of tell you what the correlations are between each other. And then we can decide together on which one actually is the leading indicator of all of them. Which it seems to me like Hex is the leading indicator right now on price. Which I think Alex would argue with me. He's a proponent to say that Hedron is the leading indicator, and every once in a while slips out from being the leading indicator. I think that's because there's just simply way more assets to throw around, and what he says would ring true to me. But sometimes I just see those correlations that to say that Hedron is the leading indicator is like, is it now or is it not? Is it now or is it not? Yes, it is. No, it's not. Yes, it is. No, it's not. And it almost happens that quickly. So I like to say that Hex is definitely, the main base asset, usually the leading indicator as to where price is going to go. Those who sell Hex generally come and sell Hedron. Those who buy Hex generally come and buy Hedron, but Hedron has other things that are happening with it that Hex doesn't, like the auctions. If somebody sees a good chunk of a T-share valued stake that's in there, they may mint or just go market buy more Hedron, which causes a decorrelation between the two, where now all of a sudden Hedron is pulling Hex up. which means Hedron is the leading indicator, and then Hex is following it. And then because Icosa is so tightly into Hex, that Icosa just gets pulled around too with it, printing the same green and red candles along with it. So between the three, it's almost like they're doing this perfect dance around each other, where they're at certain times, one is the leader and the other ones are the followers. But instead of seeing, like, I think Anamnesia, or some of you guys know her, I don't mean to be disrespectful, so I'll just say her, made a post the other day about how she thought that Hedron and Icosa were underneath Hex, pushing Hex up. But the reality of discovery was to see that Hex is being pulled upwards, like Hedron and Icosa are already above it and reaching down and pulling it up. And after they pull Hex up, that Hex kind of floats up higher than they are. And then Hex reaches down and grabs one of the other two and pulls it up. And then after it pulls up one of the other two, the other one that goes higher than it reaches down and pulls the third one up with the rest, either equally to the lower one or higher than the lowest one. And that seems to be the case even with whether they're green candles or red candles. They follow each other around in this respect. And it's funny to watch it happen. Not funny. It's kind of beautiful to watch that happen, because back when Hex was a baby and a lot of us were getting into understanding market making and liquidity providing, when you can take one asset and provide through multiple pairings, like Hex ETH, Hex USDC, Hex, what was another one back then? I don't know, whatever, doesn't matter. That to have a third pair would be the best trifecta out of all of it, to actually provide liquidity, not just in one pair, but to provide liquidity and correlate them across at least 3 different assets would be a way to mitigate your risk as much as possible. Mind you that when we were doing these things, we were trying to figure out how to mitigate impermanent loss availability altogether, like completely, like in a scientific speak Chinese to each other type of fashion, and come to a conclusion after spending many thousands of dollars that it is impossible, that what we were trying to do is impossible to do. But at the same time, we had discovered that through having 3 different assets that could have multiple pairings to each other, that you can, I don't want to say manipulate price, but you can correlate price to a way that without manipulating all 3 of them, that you can kind of push one of them around and the other ones are rewarded for it. And that was kind of like, in our heads, it was all there, but like to try to vocalize it and like explain it in a way without getting a piece of paper out and being like, look at this. And then by the time you're done, it's just full of scribbles all over the place, like over here and over there. And if this happens, if that happens, then it's all reflexive. So there is no negative externalities. No matter what you do in this ecosystem, no matter how you decide to play this fucker out, that a negative happens here, but then 2 positives show up over here. Right. And to try to explain that to people and how it works is like literally trying to talk Mandarin Chinese to people who only know English. And then now, after 3 years later, this is what we have. I mean, we have it. We have exactly, and we didn't even have to develop it. We just needed to understand it, like how it works. And then through the means of Richard Hart already deploying the foundation, and Alex already kind of understanding what we'd been talking about the whole time without us actually even talking to him, because he had his own group of people that were on the same thought processes, right? We were not so remiss to think that we were the only ones in the world that were onto this, and we were the smartest people ever, right? So when we found Alex and listened to him, like with his groups of people talking to people, we were like, holy fucking shit. Like, that means that we're more right about this than we ever thought. Like, we weren't on to some some fantasy world thought process that maybe couldn't happen, and there's something that we were missing that would cause it all to come crashing down and fail. But the fact that we found other groups of people that were on the same page as what we were, so like we weren't speaking Chinese to each other at the time, like we were actually speaking like logistics and how it works, synergetic behaviors and how it works, liquidity pairings and how they work. It was even baffling to us, being going like, where is the problem here? Where can the hinge point be to failure? And we're like, we don't fucking know. Like I can't think of one. And like, really? You can't either? And we're like, holy shit, boys. Like, this is it. Like, I think that we've found it. Like, this is it. Like exactly what we were describing, with being so fucking confusing, that here it is, right here. This is how you do it. And nobody else is going to understand this. Nobody's going to know how it works. And to be able to just have it be developed by some really ingenious people like Alex and Richard Hart, just kind of having really ingenious people to help him to be able to develop the share rate in the first place and how it operates, is like, you don't even need to work on that anymore. The share rate and how Hex works and how it operates is perfect. Absolutely perfect. And the reasons why it's perfect is very complicated in itself. However, it doesn't allow for anybody to gain more assets than what they originally started with, even if they do go stake it. Even if you have to restake, there's no way that you can get back in that position without adding more capital. Beautiful. Perfect. Positive externality every single time. Nobody gains an advantage. Everyone has to play the game. The only way to win is to participate, right? And if you do participate and you utilize the protocols correctly, the way that they were intended to be used, then you will win. Period. They're set over timelines that allow for you to see that Bitcoin went from 50 cents to $50,000. Those are the types of timelines in which you're dealing with here. So as long as you have participation from a community that's intelligent enough to understand that all they need to do is participate to win, and that's all they do, then you're already going to win. It's pretty fucking simple. And then all the rest of the complicated shit is all coded. You don't really need to understand how it all works. You really don't have to know how it works. You just need to participate, right? Which, I mean, is great. Like, you get the people who are like, I don't fucking care how it works. Just where do I put my money? Right? And be like, that's a very uncomfortable thing to put me in. I would suggest that you make those decisions on your own. But if it was me, I would do this, right? This, that, or the other. And then just stake it and forget it. You know, whether it's 180 days, 90 days, or whatever, you know, give yourself time. Like I said, give yourself time to pay attention to your family. Go do that. DCA, learn how to DCA, right? Prices are trending downwards. That's when you DCA in with dollars. Prices start trending upwards. That's when you DCA out with assets into dollars. Any other way is dumb fucking move. Don't do that. Don't DCA out on when prices are going down, and do your best not to DCA in while prices are going up. And I get it. Some people are, you know, prices are going up. You're in a bull market. You just found out about cryptocurrency. You're going to have to start somewhere. I get it. Then do that. But don't DCA over a period of time if prices are going up. Take the biggest fucking chunk of what you got within a reasonable means so you don't hurt yourself, and then chuck it in right then. You don't need to DCA in. You can go full bore right there. DCAing in is meaning that you're probably going to increase your averages, trying to buy in while prices are going up. You don't want to increase your averages. You want to lower them. Same thing with right now while prices are going down. If you're just getting in, best case scenario is the DCA in, because then you're lowering your overall average of the assets that you got in, and nobody knows where the bottom is. Nobody knows.
Yeah. Yeah. Timing is everything, isn't it? I mean, if you just assume for a moment that 4-year cycles are real, right? You get about 2 years of potential DCA in and 2 years of DCA out. You know, now if you really want to try to pick the tops and the bottoms, then you narrow that down. But people have trouble thinking in years to start with, right? And then, of course, I haven't, other than maybe Richard, right? I haven't seen a lot of people be able to call tops and bottoms, you know?
Yeah, I don't know how many bots you're going to need and smart contracts that watch stuff like this to be able to do what Richard Hart does, but man, is he good. He's definitely got his thumb on the heartbeat of crypto and the watch market.
Yeah, that too. Well, it's tough, but if you look at, just go back and look in the past, right? At least I can look in the past to see where I would have been better off. I mean, the best thing I did was plan for 8 years, really 7, because this way I wasn't planning, as painful as it was, I wasn't planning on taking a bunch of profit in 21, but having a longer time frame sets you up for what you might think will be the next cycle up, right?
Yeah,
it's not an exact science, that's for sure.
Yeah, and if you do like still have, a 7-year, 8-year timeline, and your projection is that cycles happen every 4 years, then you're setting yourself up for not a rise to tremendous availability and then a fall of 95% to mediocrity, right? Like if Hex right now was like I said before, let's say 3 cents, and it 500x's to $15 and does a 96%, 95% retrace to $1, then having $1 per hex being called mediocrity is kind of laughable, right? But that's just one market cycle. And if your intention is to spread yourself across maybe potentially 2 market cycles, then what's to say, Hex lands at $1 through that first market cycle and only 500x's, let's say. This is me being conservative. And then let's go even more conservative on the next one and say that it only 100x's within that next 8 years after that first one. So only 4 years later from $1, then you have a $100 hex, and then it retraces 95% again. And you're sitting at a $5 hex. You're sitting off, 5x in 7 years, 4 more years off of that. And your $100,000 bag is now sitting at $500,000, and you didn't even do any work. You literally just put it in a hard wallet somewhere and shoved it in a safe somewhere, went to work and spent time with your family. Sounds good to me. And that's conservative. I'm not even moon mathing shit. 500x, the motherfucker 10,000x.
Call my name, Moon Math, $40 hex.
Hi, Rich. How are you, sir?
Doing good, Executioner. Neat to hear you in this chat again. Welcome back once again. And yeah, just bullish, more bullish than ever. Feeling good. Just listening to your good words of, I won't call them advice, but navigation to everyone in here.
It's good to have the support of community members that have been around for a while to, have more in-depth conversations other than just listening to me drone on about the same shit that I've been talking about for years. Or at least that's how I feel about it, right? Like, you guys have heard me speak. It's like, oh, here he goes again, right? Talking about the same shit. But when have I been wrong is the thing. Like, pretty sure that I've led a lot of people into making some pretty good decisions. Which is not, no congratulations to me. That's only to the congratulations of the people that saw that maybe the behavior that they were doing and utilizing before wasn't the best for them. And all it took was a little bit of push in the right direction to be able to make people make better decisions. And that's all it really takes. And then I got guys like Crispy and guys like you and Mike and other people who have their own thought processes and availability to look into other things that come in and extrapolate maybe other thought processes that we've already talked about into wider ranges of outside of the box thinking, and we have a community discourse that works. So it's nice. And then we don't go anywhere. We don't just like come in here and then disappear into the night. Thanks for your dollar. Gotta go. Right? None of that shit.
I think there's a certain betting that happens from those of us who've been here long enough to know that what we're talking about has to be at least somewhat genuine. And therefore we could, gain some sort of semblance of genuine perspective.
Sorry, I'm making lunch, so I'm trying not to be too noisy.
No worries. I'm walking a water line trying to figure out where my freaking brass coupler went, because we just got a bunch of rain and a lot of the trench filled in. I need to mark them.
Executioner, I've got a question regarding the share rate on the Icosa contract and the Hedron contract. So there was obviously some sort of problem with the code, and the bonuses were, I don't know if I'm interpreting this correctly, maybe you can correct me if I'm not. But I understand that the bonus rates have been scrapped, and therefore, does it matter if you were to split the wallets? Because let's say I was a dolphin and now it doesn't matter that I was a dolphin of dolphin status in the Icosa or the Hedron staking system. Am I able to sort of, if I split it amongst, say, another 10 wallets and take one out, for example, whenever I want to, and have the other 9 and then another 8 sort of accruing, is that an okay strategy, or do I need to still be mindful of what the bonus structure once was? And so maybe I don't need to do so many wallets.
Yeah, no. Since the bonuses they're not part of the game strategy, you wouldn't have to incorporate that into your thought process on it, in my opinion. The only thing that you're going to have to watch across all of those wallets is the share rate at the time. So best case scenario is make the wallets and make the stakes all on the same day at the lowest share rate that you can get. And then you have a static number there with no variation between the share rate moving. And then as you decide to compound other smaller wallets into bigger wallets, you can make your decision at that point in time when you want to do that, how far the share rate is moved, and whether it would be pertinent for you to absorb smaller wallets into the bigger ones, which is generally your accumulated yield and not your principal, right? You'll keep your wallet open with your principal, unstake it, and then restake it based on how much that share rate has moved forward, right? If you have, let's say, 1,000 for your principal and you have 17 T shares, I'm just making this up, right? 17 T shares, you've, you had a 90-day stake length. Within that 90 days, the share rate's moved up 1,000. You find out, you go open up another wallet that doesn't have anything, and you take, okay, if I put in 1,000, which is my principal off of this other wallet, it only gets me 12 T shares or M shares. And I'm losing five shares out of that whole deal. What's happening with the auctions? Are there still thousands of them to be bid on? Are people getting discounts that are a little bit more extensive than what I would think? Are people overpaying for them at that time? Like, is it going to matter that I lost some M points or not? If it's going to be extensive, then I would make my choices a little bit wisely as to whether I in that stake or not, or wait until a period when the auctions have slowed down, so that way you can keep the 17 endpoints and garner more yield per endpoints for your share.
Okay, did I hear you correctly? So let's say, for example, I've got let's say a dolphin stake, which is say 270 days, for example. Can I actually open up another wallet now, and then put something nominal in there, and then when that dolphin wallet, let's say, matures, then I can sort of add to the one that I start today, and I'd get the same rate on that as if on the entire amount that I put from that dolphin wallet into the one that I create today. Would I get the same rate, or
no?
I wouldn't.
Nope.
Okay.
Nope. It would be based off of the share rate at that time when you added to that stake. So all the points that you had already in that, let's say, dolphin wallet, right, are going to stay there. But anything that you add onto it is going to only add points to the share rate from that day. So if you put in 2,000 into that dolphin wallet, and that was your main principal, and it gave you, let's say, 20 points, right? And then 270 days later, you had another 2,000 from your other wallets to add to it, right? Knowing that you're going to extend your length maybe another 180 days, 170 days, whatever, 270 days, or whatever the fuck it is for your dolphin status, right? That the share rate has moved and maybe gotten diluted. So it may not even be 170 days any longer. It may be a 90-day stake at that point in time. So you're like, okay, well, that's kind of cool. But I've got 20 M points, let's say, from that 2,000 that I had. And then now I add this other 2,000 there, but the share rate's moved enough that instead of 25,000, it's like 30,000 share rate. That 2,000 only gives me maybe 15 more points. So now I have 35 points instead of 40. See what I'm saying? So the 20 you originally had will stay 20 as long as you don't end that stake. If you just add to it, then it'll take the new share rate from that day that you did the add and add it to your original points.
Yeah, that makes sense. Okay. That makes sense. And so now it doesn't, like, even if Alex was to create something that was, say, designed to incentivize people with bigger stakes, it doesn't matter. Even if you spread it amongst many wallets, whatever he creates is going to be sort of equitable based on what you've put in, given when you put it in. Yeah, interesting.
Yep. And then don't forget, PulseChain happens and you get copies of everything too. So you make 10 wallets, you're going to have 20 wallets real quick.
Yeah, I mean, my thinking is to split it up once this stake matures, and then, as the years go on, and whenever it's appropriate to take the money out, take one at a time, and at least leave the remainder going for as long as possible. But it actually gives me a thought of the next question, which is lending. What is in the entire ecosystem, how do you anticipate extracting value? Because I didn't sell anything during this bear market. Everything is, I didn't have the foresight to know when the top was. So I'm sort of suffering like the rest of the people here, I imagine. But I'm a long-term holder, and I often ask myself the question, do I need to learn about when to exit? I mean, at some point I will want to exit on some of my positions, but ideally I'm a believer. I mean, I'm a believer in the ecosystem, so I'd like to borrow from the ecosystem across, Pulse and all the other assets. So I'm just wondering whether you've given thought as to how the sort of the lending ecosystem might evolve over time, and what you're particularly enthusiastic about.
Well, as far as Hex ecosystem assets, I think we'll have to wait for PulseChain to come out for the copying of things like Aave, for being able to take leverage. Which, I mean, if your position is to get out on it, to go deposit a a bunch of your current asset, whatever asset that is, to take a borrow of stable and then be fine with that. You have things like fiat that'll be there, things like famous that'll be there, things like liquid loans that'll be there for you to utilize those types of things. Maybe there'll be more in the future. Right now, I don't see anything until maybe fiat decides to. I think that their intention is to launch on Ethereum network within this first quarter. So before PulseChain launches, you might actually have the availability of utilizing those types of platforms previous to PulseChain launching. However, on Hedron side of it, if you have any native stakes or any HSIs from day one, you might already have a significant amount of borrowing power through maybe a 5555 that you have to be able to go and try to short the market, which during downturns, which obviously the last couple of weeks has proven that you don't really have much of a downturn. It would be a bad time right now to try to short Hedron. But you can, right? You could have, like, I don't know, let's say some green candles that appear on Hedron itself, and you start to get the inkling that there's going to be a retrace. Let's say that you were paying attention to my liquidity educational platform that I do every once in a while, and you were looking in there and you saw that there was no liquidity on the high end to be able to support the price any higher than what was being currently printed up on the price chart. And you're like, okay, RSI is saying that it's getting a little bit high, and most people actually trade off of that, right? The liquidity that I've recently learned how it works suggests that there's not enough liquidity any higher than the current price range to be able to support it any higher. So I might go take a borrow from what my own HSIs, knowing that the price is going to come down. And then I'm going to take the borrow of all of the 15 years worth of Hedron in the contract, and I'm not going to spend any of it, right? So I'm going to take it out and I'm going to go turn it into stables, right? Stabilize all of it right away. And then when price goes down, because you already saw that was absolutely what was going to happen, off of some of the teachings in which I have been teaching about liquidity and being able to establish support price areas, I have not gotten into teaching people how to utilize leverage in a smarter way. But if you're smart enough to be able to strap your head around that without me telling you, then you would see that this is something that you could do by seeing that there's no more liquidity support for any higher price movement, which, mind you, you could be wrong, because a market maker could pull assets from lower and add them higher and allow for price to continue to go up. So that would be a mistake of yours that you made. However, if they didn't do that and they weren't supporting a higher price, and you would be correct that there would be a retrace on that, you can take a borrow from Hedron to short that, turn it into stables, let the price drop, let people sell into it, drop that price, go back and buy more Hedron than you originally had in that borrow, pay back the borrow, and end up with more Hedron in the end result. And you could sell that for a profit if you wanted to. Legitimately shorting the market, and probably what I would say, one of the smarter ways to actually use leverage in a smart position of an intelligent person.
Yeah, that would require me to have some pretty good knowledge on liquidity pools, and that's part of my reason why I'm a bit hesitant of doing that, because I could borrow in, ideally you want to borrow Hedron at the top of the market and borrow from say liquid loans at the bottom of the market. It seems like those are the two good plays, but I suppose liquid loans, you're going to get a stable coin out of it, so you're not really having to worry about price fluctuations unless you're really highly collateralized. But with Hedron, you really got to get the timing right. You're paying half the interest rate of a long-term hex stake, so you could rationalize it from the point of view that you're paying half of, you're getting half the year, you're getting the full yield, and you're paying back in half. But yeah, that's the fact that I've got to speculate at that point. I better have watched maybe 100 of your videos before I even start that.
So I'll show you here,
Okay.
like what I would end up doing. So let's just say that for shits and giggles, that this wasn't the current price, that this red line of current pricing was like right here, right there, right? Or even better, it was like falling into this right here, which would suggest that these blue lines is actual hedron to be sold. So this is a supporting of the pricing of these prices. So if I was to get into these ranges, like right around here, and it's about to fall off because we just had green candle, green candle, green candle, green candle, and coming up to here, then this is probably where I would take a short right here. Especially if it went up to here and went into these areas, absolutely, for sure. Take a short, take a borrow, turn it into stables, take a borrow off hedron, turn it into stables, let it retrace back down into here, because it's going to want to be in these comfy areas between. If the price went up into this area, it's not going to want to fall back down underneath here very easily. It could, but it's not going to want to, and it's not going to want to go above this very easily. It could.
But would you say you'd have to observe the liquidity, like let's say for a month before, and just every single day see how that that price that sort of chart moves, so that you can get a sense for whether someone big might step in or not. If you've got a bit of a track record over the month, seeing where that how those bars move up, then you've got a better sense. Would you have to do something like that?
Not necessarily. I mean, you could get lucky that, like, you know, let's say that you did this, or you went and you just had, no, not that one, this one. You went and had this already open here, right? And as you know that on this red line, that when it goes this way, when it heads over to the left here, that is the visual representation of this going up here. So,
right.
So let's say that you just saw that it went from here and liquidity kind of stayed there, right? And it goes over here. Maybe that got filled in by somebody as it moves forward. Maybe as it goes to the left, that some of this gets chunked down and people start appropriating it over here, right? In this area here, or maybe stacking it up right here next to it, right? And that means that you're, if the price went there and you saw somebody stack it over here, then you're just going to have to wait, right? I'd wait until it went over to there before it started to fall back off like it would have here. So that's your choice. Like right now, like price goes over to here, you're going, I'm thinking I'm going to take a short. You go and take the short and you win, you were right. And price goes back down over here. Let's say that you win big and it goes all the way to here. You take those stables that you turned it into and repurchase it and put the price back up here. You go pay off that loan. You won. You made money, right? Worst case scenario. Price goes over to here. These guys cut all this liquidity down and it starts to look more like this instead of all this. Then they take all those assets there and they go stack it up right there. And you've already taken the short and it allows for price to move all the way over here. You've lost. You could have just kept all those assets all together and reappropriated a higher availability of getting more stables out of it. So that's why I don't promote leveraging, shorting, or longing in these markets, because that's how quick it could happen. Like, you could go look and see that it looks just like this, take your short, and before you could even turn it into stables, somebody could have already been working on removing all the liquidity over there and stacking it right there. And then you'd been like, shit, I just turned it all into stables. And then now price is still going up because some big whale like that was sitting back here getting all these fees right now removed it and put it up here so they could buy across their own and push that price even further up that direction. And then now you're sitting back here with just a bunch of stables and you're gonna have to buy back in at a higher price. And you won't even be able to pay your loan back off without going and buying more hedron, which is going to push the price more just to pay off your loan. So it's a gamble. It is a gamble. Best case scenario is feel out the market sentiment. And if prices are going up this direction, then go stack resources close to the price. Go stack your Hedron, on this chart close to that, or go stack your Hex close to this price. Let price move through it, pull your liquidity, take your stable, be happy you made your choice, move on your way, right? If you want to buy the asset, chances are if you go stack USDC underneath the price, it's going to cause for this to want to be pushed away from it just slightly. Because now this is the less volatile region. If you stacked it up on top of here, this is the more volatile region. So when people buy, it's actually going to move it away from your liquidity. But in a bear market, price is going to start going towards this way anyway. So you can feel real comfortable that if you go put it towards the price and stack it underneath the price, that it's just going to naturally flow through you anyway. And then you can pull that liquidity and then be able to extract the dollar value that you wanted at an average, right? If you had it from here to here, your average would be center right there, right? If it was currently 2.6 cents and you put your liquidity from 2.6 to, let's say, 2.2, then you'd get an average of it. If it went all the way to there and you pulled it, you get an average of selling at 2.4, 2.46. And you'd be happy with that, right? Like, and everyone not cries, but are worried about impermanent loss type stuff. Like, this is how bigger players move in the first place, right? They're like, oh, we're in a bear market. I know that this price is more than likely going to move, especially if the red line in Hex goes over here, right up against this. Then I'll stack USDC to make a purchase right here behind the price. And if it goes down, then I'm buying an average of whatever that would be, which would currently be 2.6 cents. And I'm happy. If I want to sell assets, if I want to sell Hex, then I would probably let it get up to this point and then fill in this spot with assets right there in this zone. I would get more fees because I'm only sharing the pool with these smaller guys that are here, and I don't have to stack on top of these guys and get less fees. And I can sell my assets as price move forward, but I would do that during a bull market, right? Just like you would with DCAing a certain way during bulls and DCAing a certain way during bears. I would do the same thing with my assets. Otherwise, if you have both sides of the pair, then you can go put USDC here and then go put Hex here and then already be within the fee range right away and start accumulating assets in the fees. And no matter which way it goes, whether you want to sell or buy or whatever you want to do, you'll still accumulate the average of them. And then you just want to kind of hope that it doesn't go out of your range, whichever direction that you didn't want it to go, right? But at least you can start incurring fees right away. That's why I would go here, because there's less people stacked in that. And I would just fill up the rest of this range right there. But I'd only do that if I saw that the price was actually moving that way. And then what would normally happen if price did start to go up with this volatile range is that people might start to sell it down and it'll just go right back down to where it currently is right now. But if I filled that in, then it would show that somebody, not knowing that it's me, is showing more support, and it can allow for it to not fall down into this volatile range where people are going to start incurring slippage. And I would fix that issue with no slippage, and people would just keep buying into it. Or if people don't care about slippage because they're not being educated and they don't know what they're doing, or if the price of the amount of liquidity that's in per tick is sufficient enough for me to make my buys. Like I think this is somewhere around 12, 13K per tick in here. If I wanted to buy 100K, then in price was right here, then I would incur some slippage, but I would also move the price to about right here within that one buy, almost filling the chasm, when I could have just filled in those with the assets, used my 100K, and it would have been it would only move the price from here maybe to here instead. Way less slippage. I would have got way more bang for my buck, and I would have been really, really happy that I did that without moving the price too much forward on myself. And the rest of the community would be happy too, as long as I kept all those assets in there. And then I can just remove like 25%, 50%, whatever, maybe lower it down to here instead of way up there, and then still be able to have liquid assets to do whatever I wanted with at that time. But yeah, you don't really technically have to look at it for like weeks on end to see what's going on. You kind of have to just look at it now, right? Maybe if you wanted to get a feel for what the market makers were doing, if they were paying attention, if they were moving around a lot of assets, you know, a big chunk right there gets filled, a big chunk right here opens up, you know, within a few days, and people are moving stuff around. Usually market makers, when they move assets, they don't do it for a day. They do it for maybe a week, 2 weeks, a month. So if you see a bunch of chunks that have disappeared and reappeared somewhere else, then it might be safe to say that wherever price is moving towards, it's okay for you to make more bombastic types of moves at that point in time, but still know that there's a risk, because it doesn't, just because I said something doesn't make it necessarily true, right? Like the guy could be a guy that moves assets every day. You know, he doesn't care about fees. He just wants to be able to slam himself right here on top of the price, get fees for that day. Price moves out of his range over here, and then he moves all that, cuts it back down, and then moves it on top of the price again, and then does the same thing, because he's not buying assets or selling assets across his own pairs. He's just trying to garner fees, and that's it. And then there's people out there that do provide liquidity to buy or sell across their own pairs, because the amount of liquidity that's there, let's say 34,000. See this one? Here, let me lock this. Oops, did not mean to do that. This one white line right there is carrying $34,380 worth of USDC right there. That would suggest that this is about the same amount of hex that's over here on this side. $34,400 worth of hex sitting in one of these blue lines. If I wanted to buy like $1 million, or let's say $350,000 worth of assets, then what's going to happen is, since we know that this is only 35K per, this is probably a little bit more, that it's going to move through that 10 ticks over to make up for that. And since this is the majority liquidity pair for hex, the router is not going to have to go look through the rest of these pairs here to be able to get me my $300,000 worth, right? It just sees that it's got 5.8 million here. It can handle 300,000 easily. And there's 222 million hex that's there, which is currently pushing 122 million times 0.0265 equals $3.2 million worth of hex. That router ain't going nowhere. It's just going to spit me out what I need. So it's guaranteed that you're going to push yourself at least 10 ticks over, making a $300,000 buy, which is right up next to this guy right there. So you're going to push the price from 2.65 cents to 2.81 cents. And 300,000 divided by 2.6. That's 780,000 hex at 2.6. And you're going to lose 60,000 hex in that move, in the best pair that you could have got, 60,000 hex. So 60,000 times, let's say, that's not bad. You'd only lose a couple grand, but still, in the largest availability of assets with the least amount of slippage, losing a couple grand, some people probably wouldn't like that. So maybe you'd make $100,000 buy, wait a day, see if people start to sell into that, make another $100,000 buy when it went back to this price, maybe wait a day, make another $100,000 buy, and then now you've gained more hex for your dollar. Better than pushing yourself all the way up into here and then losing a couple grand in doing it. But either way, I mean, I wouldn't make a trade and then have Uniswap go, oh yeah, you're going to have, 1% slippage off of your 300 grand. Let's see here. Yeah, $3,000. Like, that's, I don't know. Some people might say that's nothing, but that could be 3-4 months of rent for somebody just on one trade. So this is all good stuff. This is all good stuff to get to know, to look at, to pay attention to, before you do, in my opinion, anything. Right now, I would suggest that it's a good time to buy. There's a lot of liquidity. You could even sell. There seems to be a lot of liquidity for a little while. As soon as we get down to this range, it's probably time to stop, because you're going to incur so much slippage on it, on any sells that you do, that not a good idea. Not a good idea at all. You'll lose almost everything, especially if you were to push price down here. You'll stop getting anything for your value down here. I think there's like $250 down here, maybe. Anyway.
Thanks for that, Executioner. I really appreciate the education. Really do.
Yeah, no problem. No problem. And then so I don't use like yesterday's screenshots that I made. I have them, but this morning I got up, even though liquidity didn't really move, price didn't really move, I still went and made new ones this morning, and then had like a little chat with everybody with what's going on and how it works and what you see and what pairs have what and what's correlated to who and how it's correlated and all the rest of that jazz. And I think only part of it was recorded onto Siggy's YouTube channel. This wasn't a one and done type of deal, right? Like, I'm hungry. I've been up since 6 o'clock in the morning and been in here for about 8 hours now, 8.5 hours. So I'm gonna probably have to do this again, maybe in a couple of days, if that's okay with you guys. We'll give the chance for liquidity to maybe be moved around. I'll save my old screenshots so we can do comparisons to what price was today to next week, let's say, and see what moved where and why and how it's relevant today than it was today being next week, comparative to actual today, which is today, and why price went up or went down, right? I think it'll be kind of a pertinent thing to do at that point in time. And I might even have like, I'll do it differently. Like today, when I got in, there was only about 10 people when I started. I don't expect that because I'm in a chat that there's going to be people that funnel in here, right? Like, I don't think of myself that way. I don't hold myself at very high regard. I don't think I need to. So I just kind of sporadically, whenever the hell I got time, which I don't have intentions to be in here for 8 hours like I did. I don't really have that time to do that. My phone has been blowing up and I've just been kind of ignoring stuff a little bit, which I shouldn't be doing, but whatever. I'll try to make some time. And also I am planning on going back to work. So it might have to be like a weekend thing where I'll have to make it more structured, which will be easier for you guys, where, I'll actually set a time, say show up or miss out, right? And then Siggy can come in and know that he can get the whole capture of everything that we're going over. And you guys can preemptively have questions on stuff that you may not understand. And then we can try to wrap our heads around making it easier to extrapolate to better understanding. As we do this, hopefully I get better. I'm told all the time that I'm really good at doing this, but through having certain questions come at me, I find out that maybe I'm not as good as other people think that I am. And maybe through doing some of these things, I'll be able to change my verbiage and my nomenclature on how I use my words. And I really hate the term dumbing it down, but maybe trying to just make it easier to digest. So not only are you guys digesting the information and it doesn't feel like I'm just regurgitating all over you, but maybe put it in a fashion for you to absolutely understand what I'm saying. And then if you guys want to be able to regurgitate that same type of informative educational stuff onto other people, maybe on boards and stuff like this, you can. And that's where I would like to be. So that way we can spread the education out. And we can incorporate more intelligent thought processes so people can make better decisions for themselves. And then we can onboard people that really know what's going on, because our ecosystem is kind of complicated. It's not very easy to understand. It's easy for us because we're here and we know about it, but to grab a new person and bring them in, it's a lot for them to absorb. It is overwhelming for them to try to get to understand. So I think it's going to take a little bit of time. It's going to take some effort, obviously. But if we can get the knowledge of the more difficult shit out of the way, then we can focus on helping the onboards that need more exposure to crypto and how it works. We can work on the easier things together. Maybe not in groups together, but in some sort of way, spread the education out and help more people. That's what I would look forward to. And if you guys don't want to do that, I don't fucking care. I don't care. Like, I'll still be here. I'll still probably keep doing the same stuff.
I appreciate you.
Yeah, no problem. Like, I'll still be here. I got another 12 years before my first 5555's up. And if things go the way that I suspect that they will go, that there'll be many, 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 many more years after that we ain't going nowhere, right? PulseChain will come out, and instead of me having to go through and spend a absorbent amount of time trying to educate myself so I can wrap my own head around stuff, that we'll all still be a community team together that can, do these things together, educate each other, talk about all this stuff. So it's just like a gaggle of people that are, spitting out all sorts of knowledge based off of our viewpoints, hopefully realistic viewpoints, as opposed to just people who are trying to gain clout over spitting out shit that people really don't understand, which there's a lot of that going on. In my opinion, I hear a lot of bullshit from people who think they know what they're talking about. And in reality, it causes for me to not participate in any of the social media stuff, even in our own ecosystem. I don't watch YouTube videos from Furus. I don't pay attention to a lot of the Twitter. I just kind of stick to myself and use my own resources and come in here and try to do the best that I possibly can to answer the questions that you guys have, and then try to highlight things that I don't get a lot of questions on, that I know that you guys should be interested in, like liquidity. and how prices actually derive a price in the first place, and how, and why moon math guys are retarded, and why technical analysis guys are not fortune tellers. And they're maybe using the word retarded is foul. Maybe I shouldn't use that. Maybe I should correct that term.
Sorry for rubbing on you. That was probably my fault. I've been listening. I just had to spit in that alpha execution. But yeah, that's sorry about that.
Hi, Mike.
Is that a chime in?
How's your I'm assuming that you're doing some sort of renovation on your bathroom since the fire. How is that going?
Well, I'm fixing that. Like, I'm just replacing some outlets. But the bigger problem is that my toilet overflowed and it flooded everything in my kitchen. And that's the big problem. Like, it was just a smolder. Like, it was nothing. Like, I'm actually like already like there was no like damage. But like the problem is that the toilet came off.
The toilet came off of the hinges, off of the wax ring?
Yeah. It was like I looked in the you know, the pin on the toilet? It was fucking loose. It was rusted. So it jumbled a little bit. And so when I was flushing the toilet and stuff, like I think all the water came down. I don't do plumbing or anything, so that was the one thing my dad didn't teach me.
Yeah, the only time water runs through that neck into the waistline is when you're flushing the toilet. Otherwise, if you have a flooding problem, that's your cold water line is not attached properly. The grommet is old, dried, and leaking, which is a supply line that always has water in it, waiting for you to open up the valve when you flush it. Which the valve opens through the plunger that's inside the back of the toilet. I'm assuming that you have a tank.
Yeah.
So
yeah. I don't know, dude. I don't mess with plumbing or fucking electric. I just like literally told my dad, I was like, I'll just do drywall and sanding.
Yeah.
He helped me do it.
Like I said before, I'm not an electrical engineer. You don't want me wiring your house. However, I am licensed mechanical engineering and all that type of stuff. I could definitely I could plumb your whole house and put a power generator up, have an electrician come and wire it, and have a central utility plant in your city and run that shit. But I definitely don't want to wire your home.
Dude, you gotta be careful. Like my dad was really I think he does a great job on everything. But like, dude, that shit's tough. Like you can fucking kill yourself with electricity, so easy, with all that wiring.
You know how to not do that, Mike?
Hire an electrician.
Well, no, other than that, really even more simple than that. And it's cheap. It's really cheap. It's technically free. What you do is you go to your power panel and you shut off the main power. Then you work on electricity.
Right. Yeah. Right. Well, you got to understand, when we were doing it, it was oh shit, I'm trying to sand in this room or trying to do this. And my dad would leave some power because I needed power tools sometimes, or needed something else. So we didn't turn off all the lights. But now that I'm thinking about it, maybe I should if I'm ever touching electricity from now on.
Well, the thing is even if you do leave one circuit on, it could have it could be grounded to another circuit. So it'll actually complete the circuit around another way. So what you need is, I forget what they call it, but it's a tool that you can take and put it on a wire to find out if it's live or not. It gives you a little red or a green signal to let you know. I think it's, what is it called? I just had it on the tip of my tongue and I forgot it. Anyway, doesn't matter. It's a meter. It's an electric type of meter that you just touch against the wire and it tells you whether it's live or not. So even
my buddy's got that. Yeah.
Borrow that from him. Even when you do shut the power off, still check those wires anyway, because they could still discharge electricity, which you don't want to find out by accidentally grabbing two of the wrong wires and discharge it into your own body. That would suck.
That's why I don't touch electric stuff. I just, but good thing to note. Good thing to note. I didn't know that.
Yeah, dude. I had 4 years of mechanical engineering schooling. And in that mechanical engineering schooling, I had to have 1 year of electrical engineering school, which is required. And I still don't want to touch electricity, even though sometimes I have to. Fuck that. You don't want to have a motor discharge electrical current into the motor while you're laying across it and have it turn on and get caught in the motherfucker. That sucks.
Right.
Yeah. And I'm not talking like your car motor either. I'm talking like the motor that's as big as your car.
I have a very small area of expertise, so like all of that is not me. And when I did a little mechanical engineering myself, believe it or not, but I did the technology side, so I was the dumb side. I was just the guy who would like maybe like program like the CNC machine or operate it and stuff like that, set it up for the other guys.
Nice. So XYZ coordinates.
Yep. I didn't get too far because like when I was going through it, that was when 2008 hit, and I had a good paying job at the time. It was like $12 an hour, dude. And like at the time, that's awesome. Like this was, God, I'm fucking getting old, bro. That's 15 years ago. And like I was making $12 an hour. It was awesome. Like I was making so much more than everybody else. But then the 2008 happened. Boom. Everybody was fucking let go.
In 2000?
No, 2008. The like 2008 into 2009. Like it didn't happen right away. It wasn't like 2008 hit and then but it was slow, and we started seeing less and less parts coming in and everything, and they were being injection molded and stuff, and instead of being milled with the machines. And you probably know as a mechanical engineer, like you'd rather have a milled part rather than an injection molded part.
Yeah, it depends on the material, that you're using, for sure. Like aluminum or any type of carbon, I would rather have it milled. But if you're going to get into cheaper parts like fiberglass or plastic of some sort, some type of oil derivative, I would probably rather have it injection molded. It just depends on what your use case would be for it and the cost availability.
This place that I worked at, they made parts for like General Motors, I think was it was one of the car factories at the time.
Nice. Man, it's like I'm watching water boil. Okay. I literally am watching water boil.
Hey, Mike, you got that wallet issue resolved?
Yes. Due to small brain error, we were able to troubleshoot it. I feel very silly and very lucky that we have the Icosa chat. Like if I was a new person, which I'll be frank, in my eyes, like anybody could have made this mistake, but like it's nice to have Icosa chat because like everybody was like, not asking me for the private keys of the wallet.
Well, I'm glad to hear it, man.
I think that is a fucking, like, I don't know if it's a MetaMask error or if that's a Google or like the keyboard error, like the Google typing, but like both of them shouldn't have opposite starting capitalizations. Pet peeve. Sorry. Those guys who like get kind of picky and they like do like reviews of products and stuff. Like they get really picky about the nitpicky stuff. Yeah, I understand what they're saying now. Just like make it consistent. But like, and if you try, and then it tells you like, oh, you can't like access your wallet, reset it. I don't know. Sorry to chime in, but I'm running out anyway. But like, I was listening to for a good part of it. Executioner, keep spreading that good shit, bro.
Thanks, Mike. I'm glad to hear that you got that all sorted out and situated. Hopefully you've got your seed phrase in a nice, safe place now.
Yep, absolutely.
I mean, I guess your intention was to try to do a giveaway or something like that. So I don't know how I really feel with you having seed phrase for that wallet, I guess.
Yeah, like, well, like, no, like, it was going to be my own stuff, like, but I already figured it out, and like, I think I'm good. I appreciate you watching out for me, brother.
Good. I'm glad. I told you that I was pretty sure that I was going to get off that night, and then by the next time I talk to you, that you're going to be like, I'm just dumb. I got it figured out. Everything's fine. Let's just ignore that it even happened.
And people were asking in chat, they were like, what happened, Mike? And it was just like, don't even ask. What? Everyone's like, what's the drama? Be like, nothing. Don't ask. Oh, God.
Leave me alone.
Dude, I was more concerned because, like, I don't, like, dude, $800, like, it's, like, it's a lot of money to me, I guess, but, like, it was more the fact that I fucked up, like, and I lost funds. I was like, oh, no, that was the first time I knowingly lost, like, a lot of, like, money. Oh, gotta be careful. Thank you, guys. I gotta head out, though.
How many dollars were they planning on spending? How many dollars were spent?
Hot mic, bro. Hot mic. Hey, executioner. There you go. Sorry, man.
Nope.
I thought your mic was open there. I didn't know if you were there.
Yeah, I'm here. I would also say that depending on the values and what they're talking about, say something about like a couple $100K. Current volume is only 72K. 41K worth of buy volume, 31K versus of sell volume right now of actual reality of what's going on. If you look at the Icosa USDC chart and put it to the 1 day in that one candle, I'm not sure if the candles appropriate themselves at a different time as to when the volume appropriates itself. I don't think that they reset per 24 hours with each other because the contract didn't become live at 000 UTC. So it's hard to correlate the two. The only way you could correlate the two is if the smart contract became live at 000 UTC. And I'm pretty sure that was not the case. So the volumes on 24 hours are going to be different than when the candles actually appropriate themselves. Which you'd see in the current volume right now is 60.879K. So almost 61K, but the volume's at 72K. So it's about $11,000 more in whatever time frame that they would have an indifference to. I would say that if somebody's looking at a liquidity pool that has, let's say the USDC Icosa that only has a total value locked of 135K, and they're talking about spending $200,000, $300,000, that would be something that they'd have to utilize the program that Zetzikin put into the chat earlier today. I saved it, so let me go back to my bookmarks. The Falcon Powerful Transaction Explorer. Let me go ahead and copy and put it into the chat. Oops. And you can use transaction hashes for transactions that have already occurred to be able to see where the router actually utilized that to be able to get those types of funds, $200,000, $300,000 in a $170,000 pool. It may have split it across Hex. It may have spread it across Hedron. It may have spread some of it across ETH and then back into Icosa or USDC back in that way. So the numbers in which they're doing may cause different price appreciation across a different pairing like Icosa USDC, especially if it used Hex or Hedron or ETH to separate those values, which still would have pumped all those assets in their own right, in their own respectable way. Let's see here. Hex, 56,626 Icosa with 119,300 USDC. I mean, really not complaining about 66% discount right now. I'm just curious as to why the price is what it is, considering the fact that with liquidity. I guess I don't understand what 56,626 Icosa with 119,000 USD means. What does that mean? Because that's most certainly not actual volume across the pair. Which pair? Is he looking at one pair? And that's it? Because I see in the Icosa, the USDC Icosa pair in total has 109.8 K worth of USDC and 44,000 Icosa, which, what is that? Like maybe $30,000 worth of Icosa? $31,000 worth of Icosa altogether. Just because you have that spread across all the price ranges does not mean price gets $2 at all. With Icosa, the highest amount, oh my God, I'm gonna have to do this again. Okay, here we go. I'm trying to cook here, but hopefully I can make this real quick. Here we go. Okay, so now that we know that there is only, this is what I was looking at here, 109.8K USDC, which is the left side of this line here. All this, about $110,000 worth of USDC. This side of the line, which goes all the way up to here, to your $2.33 right here. See that? See how much liquidity is in there? See that? Nothing. Nothing. Price cannot be derived there. Okay. To show you a better view of this with liquidity, as you can see, gets quite volatile as you get past 87 cents. So price is only really supported to about 87 cents. And that's only in this one tick of, oh, we'll say maybe $1,000 per tick in here. Each one of these is about $1,000 worth of Icosa just in this little range here. And maybe those two. Maybe that's just a little bit more, right? A little bit more than $1,000, $1,100. And then up into here gets you to about, oh, 1,800 per tick. So this spreads your whole $30,000, $31,000 from here, all the way to here, right? So it doesn't take much. It really wouldn't take much. If somebody came in and spent $30,000 right now, it would push this. It would really push this. It would definitely shoot it down this slide into here and start pushing it into the really volatile range. As a matter of fact, if you went to Uniswap, let's duplicate. Don't do this to me. Is this one I give a shit about? No, I don't. Okay. There's your slippage, folks. You want to see what it would do? This is what it would do to the price. You spend $30,000 right now, you only get $19,000 worth of asset, which is really going to give you 8% slippage. Excuse me, 30,000 Icosa. Let me do this. Fucking idiot. Sorry, guys. I'm being dumb. it's going to give you slippage of 15%, which is showing you how volatile it would be to be able to buy that Icosa with $30,000. Nobody wants that. Nobody's going to want to incur that amount of slippage. You'll lose almost $5,000. You'll push the price up to 76 cents. So it would go from current here to right there with 30 grand.